All right. Hello, everybody. Welcome back to another NVIDIA earnings for Q2 2026. Not only was the NVIDIA guy, Jose, late, but apparently this other creature on the show had his camera turned off. And I was like, dude, we got to go live, turn your camera on. And he said, no. And now I get why he had his camera turned off. Ladies and gentlemen, we have Mr. Bootleg Canadian Jensen Huang with us in the house. So
you're
Tanner,
not talking to somebody who just woke up a loser, okay? We're here to win. NVIDIA's about to take over. I'm so excited to be here, ladies and gentlemen. Today, I'm representing NVIDIA's digital twin, Jensen Huang. Timu Jensen, yeah.
The way this story played out just makes perfect sense. Last week we were here, Tanner was getting ready to sleep. This episode, he didn't wake up a loser. Are you listening, people? Are you guys? This is the kind of creativity that he thinks of.
Puns on puns. Yeah,
yes.
There you go.
There it is. There it is. No, this is gonna be exciting. Thank you all for being here, Neil, Jose, Tanner, and myself. Get some drinks, get some food. We're going to be here for the next 3.5 hours. We have a lot to analyze. We say this every single quarter, but this is going to most likely be the most important earnings that we've ever had for NVIDIA. We got about 20 minutes. Well, actually, the earnings are at 4:20. So we have about an hour. We also have CrowdStrike. And you guys are really having fun here today. Neil, with the great background of Tanner's thumbnail there.
I really thought about shaving the mustache. I really did.
Is that paint under you? The green?
Oh yeah, baby. We got the football paint on. Yeah, I'm ready to go.
The wig is good. The wig is actually really good. That's very good.
Thank you. And the NVIDIA, NVIDIA badge.
Yeah, it's everything. So let's start off with you, Timu Jensen. What are you thinking for this quarter for NVIDIA? High level thoughts, and then we can go a little further into the numbers.
Well, high level, I think that they're going to do very well. Can I jump into the numbers? Because
yeah, sure.
I believe that they're going to essentially do triple digits in terms of their growth rate top line. My estimate was a little bit conservative, even though they were higher than Wall Street's numbers, but 93.5 billion. I actually think that they could come in probably over $1 billion higher than that. But that would be in a really good bull case. So my sort of base case is 93.5 billion. That would be 100% growth rate. And then on a non-GAAP EPS base, and I already know the numbers because, I created the company. So we're going to see $2.16 of non-GAAP EPS. Plus, because of my amazing investments in SpaceX, we're also going to see an additional $10 billion worth of gains, which could end up seeing, $2.57 worth of GAAP EPS due to the mark-to-market gains that Colette did for me. So she's going to mark some of those SpaceX gains in this quarter. Very happy to see it.
I forgot about the SpaceX gains. Do you think the street's going to care about that, or it's like it's baked in? They know there's EPS growth from that.
Well, I mean, there will be EPS growth. I believe $10 billion worth.
No, but if they beat EPS by like 10% and it's because of the SpaceX stake, do you think the street's going to
No. I think non-GAAP, Wall Street's expecting $2.09. I expect $2.16, even without the mark-to-market gains. I think that they'll beat without it.
Okay. Makes sense. Farzar, thank you for the super chat. Admit, please make sure NVIDIA goes up after earnings. Otherwise, I'm unsubscribing. I think all of us have been waiting for this stock to finally make a move. And, the implied volatility on the name is 5%. It's the lowest it's been in 2 years. Usually it's 8 to 10%. So the fact that there's not that much volatility going into this print means people have kind of given up on expecting a big move, which means maybe this is the quarter where we get the big move. Neil, your thoughts on the quarter and
can I just step in really quick? I just started talking to Farzad on X, and this is the first stream I think that he's seen of me in a while. So absolutely ridiculous. But all right, sorry. Go ahead, Neil. I apologize.
You can only go up from here. Anyways, results-wise, I think the market now is actually expecting 100% year-over-year growth. A couple of weeks, maybe months from now, it was much lower than that, but the market is already expecting triple digits now. Maybe they're putting the bar higher, so they are not so far behind, but I think NVIDIA delivers quite easily. on a double beat this quarter. Then it's all about the guidance for next quarter. Tanner or Jose, the next quarter is what, closer to 90% year-over-year growth or something close to it. I think they can deliver on that as well. The bigger story will be on all of the commitments, all of the deals, how are they thinking about it? Maybe some questions on the whole financing agreements that and the announcement that we've seen. How are they choosing it? How is that structured, etc., etc. But all in all, I expect Jensen to have another call where he just tries to explain what the heck's going on right now. There is no scenario in my mind where Nvidia shows weakness. Nvidia has visibility into 90+% of all the companies that are using AI and GPUs and whatever in the world, which means they know what companies will be doing 2 years down the line or trying to do 2 years down the line. And so how can they go and be behind? It doesn't happen. It doesn't happen. So I expect a full beat. The stock itself has been underperforming this year. I think the last time we covered this, the stock was at the exact same price or close to it. So it's time for this one to get a move on.
Jose, you have owned Nvidia for a long time. Your thoughts on this quarter?
First, shout out to chat. Two things that had me dying was they said Amit looks like Uncle Jesse from Full House, hilarious. And then Tanner was Granny Jensen, hilarious. All right, so thank you guys. I appreciate it. That's why I come to these live streams, just to read chat and hopefully provide y'all with some value. But and it sucks. You put me last, so now I have to say I agree with Tanner and I agree with Neo, which is not what I do a lot. But...
You didn't even hear what Neil said.
Yeah, exactly. You're last because you anyways don't listen, so you just get to repeat what we said.
So like Neil was mentioning, I do think one of these are two topics that I think are going to be big discussions right in today's earnings call. It doesn't mean I think they're important, but I think it's what the market is going to be focusing on. First is kind of the jalapeno chip, right? We kind of saw that with OpenAI yesterday, and it's become very popular. I think it's social exploded. I saw a lot of topics and discussions about this. It just continues to add that sentiment that NVIDIA, you can't hold your market share forever. Look, AI is making AI chip development easier, which I think is true, but I think the moat is changing a little bit. It's no longer about chip design, it's about the supply chain. Who has the ability to be able to lock in 60%, whatever, X percentage of TSMC's manufacturing? Who can hold up X percentage of the HBM market or the rest of the manufacturing space? Sure, you can design a chip, but can you go to all these kind of supply chain players and make them promise you that they're going to give you a piece of that supply chain for a chip that they don't know is going to work, while you have Papa Jensen and Granny Jensen here kind of giving you plenty of money for that allocation. So that's the first thing. The second thing I really would want to hear about is just like Neil was talking about the commitments, right? And see, I was listening, Neil. I'm giving you your, but it's last quarter, I think we were closer to like $130 billion in commitments. And I don't even think that was including kind of cloud plays, and it wasn't including investments either. If we see that number kind of go to 200 billion as an investor, I would want to know that visibility. You've given us $1 trillion of visibility between 2025 and 2027. But if now you're increasing your supply chain commitments dramatically, I think it's only fair you tell investors why. I already know you have it. Just give me a number. Tell me a number till 2028. Tell me $1.7 trillion to 2028. I think that's what could wake up the stock and say, look, NVIDIA definitely has this, and this is why they're making the commitments. Because now you're telling me that you've increased your commitments dramatically and you're still sitting at that $1 trillion till 2027. It just doesn't make sense. So I want to say,
and I think that's a big point, Jose, because when Jensen announced he has 1 trillion of visibility going into 2027 calendar year end at GTC, you and I were there together. The stock popped and then like 2 minutes later, the market was like, wait a second, we already knew, because the whisper number was like 950, so it's only 50 billion more. So you're right. I don't know if they make that announcement here, but they're going to have to say that Vera Rubin and everything they're seeing in terms of progress with the hyperscalers and ROI is got to push that 1 trillion to like 1.5, at least to get investors a bit more excited about the multiple expansion.
So I would say that commitment news and hopefully any visibility. That's what I'm really looking at. And then I go to Tanner for all the numbers because that guy's on point with the numbers here.
No.
I don't know why I stopped caring about the next quarter, and I really don't look at it. It's just I know Nvidia is going to crush it, right? So it's like just tell me what are the years I don't see coming right now. But yeah, I mean. The other thing that I think will be curious is they did break down their data center revenue segment to kind of the the hyperscalers and the neo cloud players or whatever I forget, neo clouds, enterprise and so on. Last quarter, that was almost a one-to-one basis. How has that shifted this quarter? Right? They mentioned that the neo cloud players were going to grow dramatically. We heard from SpaceX that they're going to do exclusive NVIDIA. Are we going to see that shift? And does that eliminate that fear of ASIC players, right? One of the fears is that your Googles, your Amazons, everybody's designing their own AI chips. But now NVIDIA is giving you a clear number that says, sure, they're designing their own chips, but the ones that are really buying the chips are these guys right here, the ones that aren't really going out and building those chips right now. So I wanted to just see that number as well. And I think that's it for me for now.
By the way, to people saying that this is a phase, it's not a phase for me, guys. Okay, this is me. This is who I want to be. To give you guys another fun number as Jose, not Jensen, sorry, that's me. I should just say me. We are likely to be the most free cash flow generative company, like in terms of a single quarter, than any other business before. So Apple, I think, did $51.5 billion of free cash flow on December of 2025. That is likely to be beat by Nvidia if we end up keeping up the high free cash flow margin that we've ended up seeing. I also want to know what they're doing in terms of the buybacks, how much they've actually purchased this quarter, because we've not seen a large appreciation over the 3-month period, or at least there's been opportunities to buy in at really cheap prices. That is the same quarter where we ended up seeing extremely low prices in Nebius and CoreWeave, and we really saw a dip in a lot of stocks, and Nvidia was down to, I think, like 170 or so. They have, I think it was $39 billion plus an additional $80 billion on top of that of stock repurchase authorization. So if they decided to buy back a lot of stock, that might also help the EPS as well if that comes in much, much lower than Wall Street expects.
So we have the poll right there, after hours. We do have 3 companies before NVIDIA. NVIDIA is at 4:30, I think. So we'll have about half an hour. But we have CrowdStrike, big in the cybersecurity space, massive run this year. Mythos, a lot of that stuff has exploded, the demand for cybersecurity. We have Salesforce, which continues to ask people the question, is software dead? Is there real sustainable growth in the world of AI for companies that theoretically can be replaced? Again, that's up to Salesforce, ServiceNow, all these companies to prove that narrative is wrong. And then Synopsys, which is also in the software space when it comes to chip design. 68% of you say NVIDIA is going to outperform. So obviously there's a lot of excitement for NVIDIA having the best numbers, which I think they will. Once again, it's going to be a question of if the street is willing to reward that. Do any of you feel their gross margins will be under pressure a little bit, or should we expect it to be at 75?
The only reason would be you're starting that Vera Rubin ramp, and like we saw kind of like the hopper to Blackwell, there was a bit of a hit. I actually don't remember what was the guidance, Tanner. Do you remember what was the guidance that they gave us? I would just pretty much, if they gave us that number, I think we're pretty in line with there. The only thing I would also want to look into is with the price increase that we saw or heard about, was that a pricing power move, or was that a memory inflation cost move? I think it's more the latter than anything. But how does that shift gross margins going forward? But Tanner, what were do you know the numbers of what they guided for this quarter?
They guided for 75% margins, and operating expenses, I think, was like 8.3 billion. But so yeah, gross margins are expected to come in right where they were before, and they didn't come out and give us any preliminary numbers or any changes. So I expect them to be high. Some people talked about memory prices putting a lot of pressure on the chips, and that their recent 15% bump up in Blackwell and Vera Rubin prices being an indicator that they might end up coming in shy this quarter on gross margin. But this is not the first quarter where we ended up seeing memory prices increase, and margins have only improved over the last 12 months or so, where we've kind of gone from that 72 upwards of 75% climbing up. Where were the pressures back then? So I'm not sure what to expect, because it's not like this was a 1 quarter hit. Memory has been a little bit of a drag for a while for them.
And the other thing, Tanner, is right.
Do I have something on my head? People keep saying I have something on my head.
No, you look good.
Okay,
you look great.
Go ahead, Jose.
I would say for Nvidia too. I mean, a lot of these manufacturers for the memory, they've been locking in supply. So it's if there is any memory changes, it's not going to affect this quarter or next quarter for them. Like, they already knew what they were going to be paying for, and to make these servers, the memory was procure maybe a quarter ago or 2 quarters ago. So it's not like that's going to impact margins today. And I think that's why if they are increasing the prices because of memory, they're proactively doing it, because they've heard that, hey, look, whoever's selling me cheap memory, they're telling me that next year or a little bit further than that, that's when we're going to see a higher increase in memory prices for us. So for us to proactively keep that margins, we're also going to increase pricing. But I don't think we're going to see, they should know the price. If you're building this type, $100 billion in revenue per quarter, you know what you're paying for your memory many quarters ago. It's not going to be a surprise for you. So it's not going to be a surprise to margins.
I think that's a fair point. A couple of people saying Burry disclosed that he bought NVIDIA calls. That is true. They are a hedge to his NVIDIA short. So that is why you're seeing that headline right there, that he bought calls. If the stock goes up,
he saw this stream, he knew what he was going up against, and so he. Do you think that he ends up adding to his shorts whenever he sees streams like this? These are the opposite purchasers of his shorts.
I just think he once again he's looking for Big Short 2.0, and AI is, if AI is the second biggest short in his career, NVIDIA's got to be at the center of it, right? So, but if he's wrong, and because NVIDIA has been taking a bit of a dump over the past few days going into the print, which usually it doesn't do, and the stock goes up, he would need a hedge against his short. So buying some short-term calls is something that would hedge it. I think the earnings call itself is going to be really important. So this came out today from Time Magazine. You've got Sam Altman and Greg Brockman on the cover with the caption, "Trust Us." And I thought it was relatively interesting because I think a lot of the general investing public does not trust a Sam Altman or a Greg Brockman for a variety of reasons. You've got Anthropic coming out saying, allegedly in their S1, they see a $30 trillion revenue opportunity, which is the entire TAM of the United States. Jose, do you think Jensen's going to have to calm people down again around circular financing, AI bubble, all of this hype? It's getting people too excited. So, that skepticism has to be calmed down. And then do you think he'll also calm down investors around the political backlash that we're seeing from red and blue states to create the progress for more data centers?
Yes to both. First, to the first one of like the circular financing. I think the only way he can really calm investors is by giving that visibility further on, or the higher visibility. It's like, look, we're doing this. Yes, our obligations have increased by an extra 40-50 billion this quarter, but that's because our visibility in revenue has increased by 500 billion or more, right? So I think that's the only way he can really calm that side. Unfortunately, on the political side, I don't think there's anything he can say outside that just AI needs to continue to innovate in the United States, and it's for national security, and it's going to be a huge growth in GDP. But I don't think it's enough. There's nothing he can show that's enough that can eliminate the political fear, and I think that's going to be one of the biggest. Now, every quarter, or in every segment or sector, or every few quarters, there's a new bearish thesis. I think this is the bearish thesis that unfortunately Jensen won't be able to give a good answer to calm investors.
Tanner, how do you think Jensen should navigate this earnings call?
I mean, he's definitely going to talk about circular financing. I think that there's been a couple things that I can almost guarantee. Well, I'm not going to guarantee, but like, I really think he's going to touch on SpaceX. He's talked extremely positively about the companies that have backed him and have purchased his products. So I think he's going to say a lot of good things about SpaceX this quarter because of that exclusivity comment that he made. I think they're definitely going to bring up what CoreWeave said about the amperes lasting over 9 years. These are going to be some of the highlights he talks about. Circular financing, the Wall Street deal. This is one that they're going to talk about in terms of creating or talking about NVIDIA's chips being so reliable that they can become an investable asset, that their performance could be benchmarked, probably taking on more risk. Like I think a lot of those comments, there's nothing but concerns on NVIDIA. I don't think you can talk to any real investor and say the multiple for what you're paying on this company right now, putting up 100% growth rates is expensive. It's just not true. But it could be expensive if you believe that things are going to go very wrong for them. And that's all they're going to be doing today, is just dodging those types of bullets. There was actually a recent upgrade from Raymond James to $352 from NVIDIA. So those estimates continue to climb higher.
I think this is a good question right here. Neil, I'll let you take this one. But do you think Nemotron and poolside acquisition will make a difference as NVIDIA pushes into open weight models? I think the reason they're pushing into open weight models is because all of their biggest customers, OpenAI, Anthropic, Google, Amazon, are building their own chips and pushing into NVIDIA space, competing in the chip space, which is smart for them because they don't want to keep paying the NVIDIA tax. But obviously, Jensen has to fight back. So, Neil, do you think there will be a heavy emphasis on the call around the benefits of open source? You're muted.
Amateur hour. I'm sorry, guys. I'm sorry. Go ahead, Neil.
I didn't mute this. I mute my microphone, so somebody muted me. Amit. 100%. 100% is going to talk about open way models, open source, Nemotron, the recent acqui-hire. I don't think they'll talk that much about it. Maybe he'll name core Loopside, but yeah, the drop in token prices, he's going to say, look, drop in token prices, it does not mean that these companies will generate less revenue. Just means that now we have GPUs that you can charge more per hour. They'll just finish a job way quicker. And so your GPU frees up quicker, which means more customers can use that same GPU and you'll generate way more revenue. It's all about how many, the cost of what, millions tokens or something like that, the equation that he always uses. He will again say that we are the best. When you look at total cost of ownership, nobody can go against us. And so it's going to be, again, the same story that he's been saying time and time again. Whether the analysts and the market will listen this time is up to them. But from his standpoint, I mean, I've talked about this with Jose a couple of days ago with regards to closed models, again, going against the open source, open weight models. For NVIDIA, it's going to be a win-win regardless. So he's just, again, positioning himself as, okay, you know what? I'm going to win regardless of what happens. And it seems like we are going to see a move towards way more open way model than the other direction. That doesn't mean that Anthropic and OpenAI are going to go out of business, but it does mean that NVIDIA makes sure that they are going to win.
I also wonder how he's going to frame this open way. Is it more of a defensive move against the AI companies, or is it more a defensive play against kind of China? Because right now the open weight models are being built are mainly in China. So Jensen is a very he talks about a very paranoid person. So I wonder if his paranoia is saying if Chinese AI players keep developing these models, eventually aren't they going to go to Huawei or whoever builds chips in China and start getting their chips manufactured, made more efficient on Chinese infrastructure? So Jensen is like, I don't want that to happen. Let's create a strong OpenAI model world here in the United States, because then we can assure that the chips that we're going to be making are going to be used for this open weight solution. So I wonder if it's more of a regional issue opposed to a defensiveness against the frontier plays, or maybe even a little bit of both.
I think that is a fair point. We got about 30 minutes until we get those earnings. We have a bunch of other companies before that, but obviously NVIDIA will be important. How many people in the chat, you could just put what you think, thinks that it's going to be flat? How many of us think it's going to be like a 2-3% move? Like, it's not going to be that substantial. I think there's a decent chance 209 to 212, and it's just there. The market's not happy, the market's not upset, and it continues to do what it's been doing for the past couple of months at this point.
Do you think it's just going to trade sideways forever?
No, but I wonder if the results are amazing but not enough. but it's also not enough to take it down because, Nebius, CoreWeave, all these semis are going to be contingent on what NVIDIA does today. And if it does consolidate and go sideways, it wouldn't surprise me. I don't expect it to happen, but I don't think it would be surprising if it does.
Yeah, but I think that's more based on like the history of the stock is getting to you. Similarly to CoreWeave's earnings, it had dumped every single quarter before that everyone was residing to it dumping again. Then it was up 19%. So, and I'm not saying that this is the breakout quarter, but at some point, I just read the report from Raymond James. They talked about by 2027, they're going to have a lower PE than the S&P 500. How long can that go on for if the growth continues to stay up? How much of their outstanding shares will they be able to buy back? What does that dividend growth get you? They just 25x it. Are they going to end up able to 5x it again? I mean, they've got the money to do so. So I like at some point, I think that the valuation has to bottom out. Maybe it's a year from now. But if the growth is expected to stay high, I don't know. I'm not counting them out.
To me, the only way this stock moves up today is if we get a strong visibility number. Not just even a strong guide. Like, even if guidance is crazy, I think a visibility to be on the number they've given us, that 1 trillion, I think that's really the only thing that can say, oh, you know what, maybe we aren't crazy and AI pilled right now.
Neil, you think it can go flat or something better?
If it does drop by the expected, 5% or so, I just checked with my crystal ball, we are going to go quite close to the 200-day moving average. So I don't know if that's already pre-planned by the market, but whatever. It is crazy that an Apple is still trading at 36 times earnings trailing and 34 times forward, while they're nowhere close. Even a free cash flow profile of NVIDIA is getting better and it's cheaper. I don't see NVIDIA suddenly growing 10% 2 years down the line. That's not going to happen. So I get that Apple is quite predictable and you might not have that whole stress around, oh, what happens with margins in the future? What happens when the AI bubble pops, etc. But at what point does the risk become the whole thing for NVIDIA and nobody talks about the reward? Like it doesn't make any sense. So I don't know. I bought an extra share today, as always. So hopefully it goes up. So I'm up on that extra share.
I mean, if there's one thing I can say, Neil, the more you buy, the more you make.
All right, 4 p.m. The stock market is now closed. Thank you, everybody, for being here. It's a big one today with NVIDIA Q2 earnings. All right, so now we wait for the next 30 minutes before we get these numbers. In the meantime, we should be getting Salesforce, Synopsys, CrowdStrike, and a few others that are actually going to be pretty important. We have HPQ, which is more laptops and computers, not HPE, so not server racks, but that'll give us some insight into the consumer. Okta, so if you got some more SaaS in there. Viva Systems. So you do have a bunch of these other companies that we will take a look at before we get to NVIDIA. Okay, Salesforce already making the move. 4%. The stock was at 150 at the lows this year. That is up 4.5% after hours. Okta also up 3%. I'll try to get the numbers on Salesforce in a second, but that goes green.
They're out.
Okay, so Salesforce, here we go. We have operating income, 3.87 billion versus 3.81. That's a beat. Adjusted EPS, 590 versus 291. There's got to be some unrealized gains that they've factored into that. They beat by 80% on EPS, 11.34 versus 11.32 on revenue. Revenue's up 12% year over year. EPS is up 103% year over year. Maybe they had a SpaceX stake. I know they have an Anthropic stake, but until that one goes public, I don't know if they, well, no, technically, I think they can mark to market their value on Anthropic. So maybe it's Anthropic that's creating that beat for them. And then third quarter revenue, the street wanted 11.4. They're guiding for 11.5. So that is a triple beat on the guide, revenue, and EPS. That stock is up 5.6% after hours. Okta, they beat by 9%, 105 versus 96 cents on EPS. That stock's up 7%. So you got two SaaS names running. Revenue, 805 million versus 793 million. That's a beat by 2%. EPS is up 15% year over year. Revenue is up 11% year over year. Again, Nvidia's in about 20 minutes. But Okta and Salesforce going green. Nutanix, we also have this one, a smaller SaaS company. That's up 4% after hours. They beat by 22% on EPS, 60 cents versus 49 cents expected. Revenue, 757 versus 738. That's a beat by 3%. EPS up 62% year over year. Revenue up 16% year over year. So you got three software companies reporting, all three of them getting some love after hours. Okta up 9, Nutanix up 4, Salesforce up 7. It's been a while since Salesforce had a 7% move on earnings. And there you go, as that's getting it. Yeah, ServiceNow should be benefiting from that as well as that continues to go green. Look at that, ServiceNow 2.53%. I mean, the software is dead narrative, I think, has been pretty disproven across a variety of earnings that we got. But some of these bigger names, it's taken a while for them to show their earnings to disprove it. And I think you might be seeing that to an extent after hours. I also think it's good if the software names get some love, because at the end of the day, you know, Nvidia is, you know, trying to make sure that the GPUs that they sell to train these models are helping the software companies. Ironically, the software companies create a lot of demand for those, the frontier labs. So it would help Nvidia if AI is helping software, not destroying software.
We also recently just saw an OpenAI, two OpenAI executives leave OpenAI and go back to Salesforce. Pretty wild.
That is correct. Yeah, that is. Oh, there it is right there. Yeah, that is kind of weird. Tanner, do you have a take on this, or it's just, it is what it is?
No, I mean, there's a lot of speculation whether the IPO is not going to be as exciting. You know, disbelief in their ability to replace SaaS, and that. But who knows? Maybe Salesforce is poaching these guys back and putting up big numbers in order to sign back these executives. I'm not sure. I think it's too early to tell.
Okta right there, up 12.
$2.4 impact from strategic investments from Salesforce.
That's got to be Anthropic. I would imagine that's Anthropic. I think they invested a few billion years ago. So, I mean, that's why this Anthropic and OpenAI IPO are also really important. You have a lot of companies, including Google and Amazon, that are invested in these guys. We don't have Synopsys yet. That's at 1%. I don't have Viva Systems either, but that's flattish to up 1. Okta is massive. There you go, 13. Okta is security, if I'm not wrong.
Correct.
Yeah, cloud-based identity and security. Yeah. I mean, maybe CrowdStrike. We got to wait for, that's going to be a big one too. CrowdStrike up 3.
Yeah.
Okay, CrowdStrike. Let's see what we got. The market cares about cybersecurity more than ever.
It's just probably because Okta is up. So for now, CrowdStrike is up, because I see no numbers as of right now.
Okay, I have the guide on
Rubrik is
CrowdStrike.
probably up.
CrowdStrike guide, Street wanted 5 point, so they went from 5.96 to 6.01. So that's a pretty big increase on the guide. 6 billion is the guide. This is at 4%. It is down from the 200s over the past couple of weeks. That's up 5% after hours. So you do have an increase on the guide. I don't have EPS or revenue numbers yet. No, I do. EPS 31 cents versus 29 cents. They beat by 7%. CrowdStrike. Revenue's up 26% year over year. Not in the 30% range yet, but it was at like 22% last quarter. So it is accelerating Q over Q. Revenue 1.47 versus 1.44. They beat by 2%. EPS up 35% year over year. So we have a double beat, actually a triple beat with the guide. Also beating third quarter revenue. Street wanted 1.52 billion. They're guiding to 1.53. Again, these are not massive, massive beats, but they're also not misses. And I think as long as that narrative around cybersecurity being relevant matters, the expectation that the trajectory for growth over the next decade being strong is why this stock will get its premium. 8.7% right here on CrowdStrike. It was at 227 on August 14th. It fell all the way to 180. It's now at 205, up 8.4% after hours. We got Synopsys. This stock is Basically flat, beat by 7% on EPS, 391 versus 367. Again, this is chip design, 2.47 billion versus 2.4 on revenue, beat by 2%. Revenue's up 42% year over year. EPS is up 15% year over year. I would expect this to be up a little bit more right here, but it's not. CrowdStrike up 9% after hours. CrowdStrike did do a split recently. They did a 4-for-1 split. If it was a pre-split, it would be an $800 stock right now.
Did you see the Salesforce and Anthropic expanded their strategic partnership and unveiled Cloudforce? Cloudforce.
They called it Claudeforce?
Yes. This is
Oh
like
my
typical
goodness.
Benioff to these types of things.
Claudeforce. Okay.
It's real. I see it here. Yeah.
Jose, any thoughts on these software companies crushing it?
Yeah, I mean, I think it's bullish AI because all these companies are implementing AI, and one of the fears was that you are going to be losing out, or businesses was going to be worse, margins were going to take a hit, you were going to lose revenue because of AI. But if now you're showing that the end customer is still making money with AI, I think it just gives more legs for this AI story to run. So as a semiconductor AI investor, that's my first kind of thought process is I'm happy that other customers outside of Anthropic and OpenAI are winning, because if only Anthropic and OpenAI are winning, that's the scary part. But when you see other players and not even the hyperscalers like the SaaS companies winning, I think that gives you legs for the AI story.
There you go. Benioff taking some shots, saying they are the #1 AI with Claude. So basically saying, they are winning against OpenAI. And quite frankly, the numbers are proving that they're winning in the enterprise versus OpenAI. But I agree with you. The software companies need to show this type of growth and get the right sentiment from the market. If not, what are we doing this whole AI experiment for in the first place? So this makes sense. Salesforce right there up 11% after hours. CrowdStrike up 10. Synopsys actually down 2. Nutanix down 1. ServiceNow up 3.5. And then Okta up a nice 15% here after hours.
It's just generally good for the S&P 500. Like the amount of beats both on the top and bottom lines this quarter round has been extremely strong. I think there's high 80% beats across the board. Many of these companies are raising guidance or reaffirming guidance. Very, very few companies in the S&P 500 have cut this quarter round. So constantly adding to that story, these are sort of the last companies that are coming in to make sure that this quarter was a success, is only proving that at probably even a higher success rate than the average. So this is actually boosting up the total. And by really good amounts. I mean, Okta up 16, Salesforce up 12, CrowdStrike up another 9%. I'm super happy to see it. Now we just need to make sure that the biggest company in the world comes in with a bang. That should be at 420, I believe. Last time they were a little bit later.
Oh, it's usually, I thought it was 4:30. Okay, so we have 10 minutes then.
I think they were...
earnings.
They usually do 420, and then the last quarter, or maybe it was the quarter before that, they came in at 4:30. They were like 10 minutes late.
Okay. Everpure, they had a massive beat and raise, beat by 21% on EPS, 70 cents versus 58 cents expected. I believe this used to be Pure Storage, and this is now Everpure. Beat by 8%, 1.18 billion versus 1.110 on revenue. Revenue's up 38% year over year. EPS is up 63% year over year. Massive beat on the guide as well. Adjusted operating margins 19.4%, GAAP gross margins 68%, subscription ARR 2.1 billion. That's up 20% year over year. You're seeing some really decent growth out of these other companies. You also had Viva Systems revenue 928 million. That's a beat, up 18%. Viva's now up 3%. The software companies, dude, they're crushing it right here after hours. Subscription revenue up 16%. Guidance 935 million. CEO said the Q2 results exceeded guidance across all metrics. Management said its full year outlook improved across the board. As you're seeing more momentum. Urban Outfitters, this is a consumer brand. Are we up or down? We are down 2%. The consumer stocks have been taking a little bit of a hit. EPS was 172. Revenues up 10% year over year. I'm not seeing any comments about the company complaining about inflation or the consumer like some of these other companies did over the past couple of days, but Urban Outfitters down 2%. I like this going into the print. I like that the software stocks are running. I think it makes sense.
Yeah. And Okta on their press release, my apologies if someone said it, but they one of the first things they mention is as AI agents transform every layer of technology, every agent needs a trusted identity and clear controls of what it can access. So when I read that, what I'm hearing is there's going to be a way to monetize these agents for all these players. Is it going to be an added subscription to them? Is it going to be a consumption base? So again, it goes on to that story that AI is helping software, and you're no longer getting just the Anthropics and OpenAI's winning. Now we're seeing those real results of other companies winning in this AI transition.
Yeah, this is important, right? Being able to set up the framework for how these agents are actually going to be monetized. I mean, agents, we are all living in a world in which agents are a thing. You know, this really, December 2025, you had Claude Code come out, and then the proliferation of agents, OpenClaw a couple months after that. So the market, Nvidia flipping green a little bit right here. We got 8 minutes to earnings, figuring out how to interpret where agentic inference is going to go, how many more CPUs you need per GPU, which is why ARM, Intel, AMD have all gapped up over the past couple months. It's a brand new world for the entire tech sector. And so I think Jensen also explaining how they're going to monetize agents is going to be really important today.
Everyone's calling me the SoFi grandma. Do I really look like I'm Jensen, guys?
No, this was the funniest. Bsov said, I know Tanner's going for Jensen, but all I'm seeing is Edna from The Incredibles.
No, bro, my hair's white.
I see some Elizabeth Warren as well, but
I mean, that's fair. That's fair. For those asking, how do you get access to the news? I have a news terminal. I'm putting that in the chat right here. It is free. If you have WhatsApp, you can join it. There's the link right there. It's called cactusjack.com. This is an actual person who's part of the channel. It's not AI, and he's curating all the information second by second. So if you want to join that, I'll pin it right here in the chat. Free to join.
Yeah, he's the best.
Get the news.
great WhatsApp channel as well. Yeah.
Okay, so the software companies crushed it. If Nvidia were to actually fall, I would be a bit skeptical on why, given the software companies are growing because of AI. Nvidia's supplying the GPUs to make AI a thing. So I don't know. I think these software companies are giving us a pretty good read into what Nvidia should do. But in the next 5 minutes, we're going to have to see if that actually happens. Nvidia right there, 21038 now after hours. Does anyone here think they could actually miss on earnings by any chance? And if you don't think they can miss, Tanner, do you think, Street's guiding for the whisper number is 97%. Do you think Jensen just goes that extra mile and gets them the triple-digit growth year over year?
Yeah, I mean they're going to see 100%. Well, I mean, I can't say that. We don't know 100%. But I believe that they would push that over to 100% if they were close. I mean, it's just a really good headline number that could get Wall Street or algos excited. But for real, it honestly could be way above that. It might even be closer to about 106%, seeing roughly about 94, 95 billion, which many analysts have also reported on.
Isn't it crazy? We are living in a time where a $5 trillion company at 75% margins is about to grow 100%.
Faster than, they'll have a bigger rule of 40 than Palantir once again.
And them and SK Hynix and I think Micron are the only three companies in the world that have that bigger rule of 40, which is, I mean, it speaks to what Palantir is doing, but it's also because those are hardware companies.
Yeah.
So for them to have that margin, I mean, it's pretty incredible.
Yeah, I actually think Palantir's is more exciting because the other ones are benefiting off large bottlenecks, but Palantir's may not even slow down. It's the craziest part.
CrowdStrike up 10% after hours. Salesforce again up 10% as well. We are still waiting for NVIDIA. We should get it in about 4 minutes. Let me pull up a little bit of the coverage right here.
After pull up something,
go ahead.
the press release from CrowdStrike, they mentioned something that was pretty cool. They mentioned the mythos moment translated into mass market acceptance that AI adoption needs security, and that's CrowdStrike. Every enterprise will run on AI, and securing it is the largest market opportunity in our history. So again, kind of just going back, it's like it seems like it seems like now we're getting that enterprise AI wave, which we've been hearing about from NVIDIA that is going to happen. But it does seem like this, or maybe I haven't even been focusing, but it seems like we're getting some clear answers that it's really happening right now.
Rubrik back above $100, up 4% on these results. They report tomorrow. I expect also a triple beat yet again.
I mean, this is exciting. Salesforce, good numbers. CrowdStrike, good numbers. Okta, good numbers.
Check out
Palantir's
HP
up
though.
after hours. HP is down 7%. Do you know why, Tanner?
No, just looking at the stock price.
If this has to be inflation on consumer products. They beat by 20% on EPS, 83 cents versus 69 cents. Revenue 15.6 versus 14.3. It's pretty good top and bottom line beat.
Guidance beat too. Next
That's
quarter
a little
and
weird.
full year looks better than expected.
Palantir right there up 1% after hours as well, as the software names are going higher. Yeah, I mean, pretty much every company outside of HP so far showing relatively strong numbers. As long as this continues, then I think Nvidia should be able to show some strong growth as well. Here's the coverage on Salesforce.
It was $11.34 billion in revenue for the quarter versus about $11.32 on the estimate. Bottom line, we've got an adjusted EPS number, $5.90, I should say. That is the adjusted number. We're not going to compare this one. There is, from what we're seeing, a massive investment gain, about $2.6 billion. It does appear to be from an investment in
All good?
The guy muted itself.
This idea
Sorry, I was muted, but
Amateur hour.
Dario and Benioff are live right now.
that you can use CloudForce to not only query your systems, but build applications dynamically, it's really a first in the industry, Jim. We've never seen anything like it. It's completely exciting. I think that this is the way all enterprise systems are going to run in the future.
All right, so Dario, I think that the combination is terrific, but I also know when I go to my Agentforce page, I see
We've never seen Dario do this on an earnings. So this partnership must mean something to them if he's actually willing to talk to the media with Benioff here.
the OpenAI's there. I don't know how exclusive this is. I don't know what you get out of it. Tell me how this distinguishes you from other LLM models and why this is so exciting for you.
Well, look, our view is that Claude is the best model for integrating complex amounts of information. We've been using Salesforce and Claude within Anthropic. We're huge Salesforce customers, and as you can imagine, the pace of things at Anthropic is incredible, and we have to both manage individual accounts. And we have to answer all these incredible strategic questions that change every time a new model and a new product comes out. And we've found that this combination product that we've built together is the most useful thing in accelerating it. Within Anthropic, for a long time, we've been accelerating the research teams within Claude.
Okay, NVIDIA numbers should be out. We are down 1% on the immediate reaction. 207.60. I don't have the numbers yet. Let's see if that reverses at all. It did hit
NVIDIA
211. Go ahead, Tanner.
$96.2 billion in revenue. Cleared my number. Absolutely cleared it. Adjusted gross margin 75%. Net income 59 billion. I don't know why it's down. There must be some reason. Guidance destroyed. Revenues up. Net income big beat. What is the street not liking? How is this not 220 right now? $96.2 billion in revenue.
NVIDIA grew 106% year
I
over
said they
year.
could do it.
EPS is up 111%. 222 versus 209 for EPS. 96.2 billion. That's a $4 billion beat versus 92. Stocks down 2%. That is
Of course.
kind of incredible.
Of course. Why wouldn't it be down?
I'm starting to get really pissed off, guys. This call, I'm about to blow some minds. The growth here is going to be fantastic. Even the guide's way higher. Like, what does that guide represent year-over-year growth on? Let me do the math on that real quick.
Data center revenue was 89 billion versus 85 billion. I'm trying to find the guide right now and get the press release. Stocks at 205.
Cactus put the
Okay,
guide.
I got it. All right, so here we go. Here's all the numbers. Okay, so revenue up 106% year over year, adjusted EPS up 120% year over year, data center up 117% year over year, adjusted gross margins actually are up 250 basis points year over year at 75%. Q3 revenue guide, the street thought they would do 104 billion. They are guiding for 108 billion, which that means they're probably going to do 110 to 112 billion, which means we're going to get 2 quarters in a row, I believe, of around that triple-digit growth. Adjusted gross margin, that's down next quarter, 74 versus 75. Adjusted OpEx at 9 billion. Operating income for this quarter was 64 billion. That's up 124% year over year. They, I believe, bought back with the dividends 26 billion in Q2. They have 99 billion left on their buyback plan. Jensen says AI has reached its inflection point. It's doing useful work. Its tokens are productive and profitable. Now compute is revenue. The AI infrastructure build out is at full steam. Rubin, now in full production, was built to power exactly this moment. They've also broken down the revenue for the first time, or for the second time because they started this last quarter, between hyperscalers and everybody else. So out of that revenue that they got, 96 billion, 48 billion of it was hyperscalers, Amazon, Meta, Google, etc. The street thought it would be 43. The second version is called edge computing. This is basically your neo clouds, 7.2 billion versus 6.7 that the street thought it would do. So they beat on hyperscaler and edge computing. Obviously, the majority of the revenue is still concentrated within the hyperscalers.
So it's 90% growth for next quarter, approximately.
Okay, so
Yeah,
not 100%.
exactly. And it's likely to be closer to 95 if they end up putting up, or maybe even a little bit higher. That's pretty wild.
This is quite incredible in terms of the stock not really getting the move. Let's get a little bit more coverage here. Yeah, let's get a little bit more coverage here, and then Jose will get to you on your thoughts on this.
But you can see shares are dropping roughly 2%. Could be because of 2 reasons. First, the Q3 revenue guidance coming in at 108 billion, which is higher than what the street anticipated, but lower than what the buy side numbers were, around $109 billion. This revenue guide, again, does not include anything from China, despite all the back and forth headlines. For data center revenue in the quarter that just passed in Q2, data center revenue came in at $89 billion, slightly higher than the 86 the street anticipated. And then a growing concern was gross margins. For the quarter, gross margins came in at 75%, exactly in line with what the street wanted, but it's the Q3 gross margin guide that is light at 74%. Again, we know that they had promised mid-70s and that there was going to be some tapering off because of memory costs, and so now we're starting to see that right now.
If it's actually getting sold off on a 1% gross margin miss,
I don't think that's the reason for the sell-off. Their
Also,
commitment
what's the
numbers
miss?
are out. Commitments were increased from 119 billion last quarter to 279 billion this quarter. So, I mean,
Jose, hold on. Jose, can you explain commitment? This is Nvidia committing money, or what is
yes,
this mean?
Nvidia making commitments to like its supply chain players, to its neo cloud players, to whatever, to allocate whatever type of resource, right? Either being land power, the land power that it's doing, the supply from memory, the supply from TSMC. So last quarter, that was 120 billion. This quarter is 279 billion. A bear, I think anybody can say, hey, that's getting crazy numbers, right? 279 billion, like maybe when you were at 100 billion, your free cash flow and all this would be able to cover you just fine. But now you're going beyond that in what you typically have in your balance sheet. I think it's extremely bullish because if they're doing this, it means that they have so much visibility. And this is why I go back to where if you're giving me this type of growth, if you're telling me in the quarter you grew your commitments by $150 billion, you have to show me proof as an investor. I think it's right for investors to tell me what visibility that you see that is making you do these types of commitments. But 280 billion, I mean, you're talking about the sizes of certain semiconductor companies in just their commitments right now.
Yeah, but the commitments are for 27, 28, 29, 2030, 2031, 2032, and thereafter. Like the 120 is, of course, for the remainder of 27. Then we have 100 for 28. And then the number does come down from there. It makes sense, right? Because they've made some huge announcements with memory players, with some supply chain players. So I'm not that surprised that the number is up quite a lot. It's just them securing the upcoming years. It's a big jump, but I'm not that surprised. Like it's primarily related to the procurement of memory.
Yeah, so
well, there's a reason why Micron and the neoclouds are up after hours, right? It's a good find, Jose.
It's that where it's like, and I agree with Neil, it's not bearish in my opinion, similar to Neil. I'm pretty sure Tanner, everybody's like, this is what you need to make sure you don't lose that supply to somebody else. If everything is a bottleneck right now, you don't want to lose that supply. You need to make these promises to the supply players. But then the street wants to know, hey, if you're doing this, and I'm happy that this is the first time they actually broke down that commitment in this press release. I think usually they share it only in the 10Q report and not even to this extent. But we now see kind of 2026, 2027, as Neil was just mentioning. It's in the CFO commentary, not in this one.
Okay,
yeah, page 3.
Okay, Tanner, your thoughts on that? I mean, if they're committing this much money, even if it's over 10 years, the bull case is that they have so much visibility into demand. The bear case is they're going to be spending more money. Their margins are going to go down a little bit. Like, is that a reasonable enough bear case?
Yeah, I mean, I feel like we knew this with the Wall Street deal with the Ohio data centers, that they were increasing their overall commitments. I mean, for me, it's business as usual. They also returned a record. So free cash flow didn't end up beating Apple's 51 billion because they returned a record $26 billion to shareholders, which is pretty wild. A lot of that in share repurchases, some of that obviously in dividends. The EPS came in so much higher than I would have expected. The gross margin came in exactly where we thought it was going to be. Maybe not for next quarter, but there's always potential inflections in margins whenever we're going into new architectures. Like that lady said on CNBC as well, that none of this is inclusive of China revenue at all. And we also are seeing China loosening their stance and are allowing tens of thousands of GPUs to be sold. Not a lot. These are not big. But the fact that they're not being included at all, and there's likely to be hundreds of millions, if not billions of dollars worth of GPUs sold to China, is really important. I'll have to listen to the whole call. Like, I'm not going to say whether that's bullish or bearish, but this is beyond my expectations so far, and the stock is down on this news based on commitments that we already knew was going to be a part of their game, at least for the time being.
Yeah, I think, Tanner, the only thing is more like the size of the commitments. And I think most bulls understand it, right, Tanner? I think we understand and we know this is needed to continue to see this growth rate. But I also don't think it's bad for market to be questioning, because I'm looking at the numbers some more in that press release, and it was for from here to 2032, 279 billion on supply commitment, 29 on cloud service agreement, a total of actually 366 billion from now till 2032 and thereafter, just on supply commitments. But then they also have other types of commitments. They have the AI cloud backstops, which is different from the cloud service agreements that they had in the previous one, but in forms of AI cloud agreements. And data center leases, that's an extra 56 billion to that 366 billion that they have. And then they have guarantees on those kind of land, power, and shells. And on that already, they have about 108 billion. So you're talking about in all these commitments, and if you scroll down on it, there's like the 366 here. Then if you scroll down a little bit, they have the next page, they have 56 billion here on other commitments, and then you just passed it, the one on the top. Then they have 108 billion here. One under there, yeah, 108. So you're talking about commitments now being close to $500 billion, right? So I agree that Nvidia needs to do this. I truly do. But I think the market is right to question, do you have the funds to be able to do this? Is this AI cycle going to last 2 years for you to be able to make it? Again, I think so.
Well, it has to. But it has to. There's no way Nvidia can say we're committing upwards of $300 billion if they don't. To your point, Jose, that you said, I think this is the most important thing you said in the show out of all of us today. The visibility on that revenue number has to exceed $1 trillion at this point. if they're already commit. It's kind of funny. The hyperscalers sold off this year initially because the CapEx was going from them to the CapEx beneficiaries, Micron, Nebius, CoreWeave, et cetera. Now it's like Nvidia is getting sold off potentially right now because they have all these commitments to those same companies, but they were the ones that were getting all the CapEx from the hyperscalers. So I would imagine you believe, Jose, they have to give you that visibility of revenue number. Otherwise, this is just too much of a commitment for $1 trillion over the next couple of years that the street's not going to be happy about.
Yeah, I mean, I agree. They need to give me that. If we see, I'm actually debating right now if I should buy some stocks right now, because if they're seeing this type of, if they're making these types of commitments, even if they don't tell me the number, it's going to be some crazy number that they have in visibility. Like it's.
Yeah, but what are you buying? Memory?
No, Nvidia.
Oh.
Like it's making me so bullish in this company that the type of like if the street is punishing you because you're preparing yourself for the type of visibility that you have, I think it's, I mean, I like it. I'm trying to think why the market hates it, but I like it right now.
They did say here under the guarantees that the commitments, like each generation of NVIDIA infrastructure deployed at Port Spike could represent approximately 1.5 million NVIDIA GPUs, or approximately $150 to $200 billion in NVIDIA revenue. And the sites over the next 20 years can support multiple infrastructure upgrade cycles. So they give us some clear numbers here.
This earnings call just got a lot more interesting.
Yeah.
Because now that these commitments are in the pushing $300-400 billion range, it's, you know, this is the obvious bear case that someone's going to say, why is Nvidia willing to spend a couple $100 billion on all their suppliers? Because they're financing the build out of their own chips, right? Like for them to sell these chips, everyone in the ecosystem, Micron, SK Hynix, the neo clouds, packaging companies, they have to also be able to support, because there's all these other, you know, nuts and bolts, photonics, memory, et cetera, that go into the chips. So if some of these companies are insolvent and they don't have the demand from Nvidia, which for many of them is their biggest customer, Nvidia can't sell any chips. I think that's going to be the bear case here. I think there's an easy answer to that. As Jose said, that means they have a lot of visibility into demand, but Jensen's going to have to really explain that on the call today. Nvidia right there, still down 2% after hours.
At the end of the day, he will just say, look, our new chips, if you have the same megawatts, you will be able to generate more revenue. You won't need, not everyone needs a gigawatt scale data center. If you have 100 megawatts, you previously made X dollars. With our new chips, you will be able to make X at the power of, I don't know what's the jump here between Blackwell and NVIDIA Rubin, but it's quite big. And he's just going to repeat it again and again and again. I honestly, if I were looking to expose myself to even more, I wouldn't mind buying it more now.
Yeah, this is CrowdStrike up 12%. The software name's not budging. This is a very specific Nvidia reason for why we're down right now.
Yeah, it's surprising that the memory names aren't up more, considering how long-term a lot of those deals are that they signed and at the size that they're signing them for. Specifically in this quarter, separately from last quarter. Like, that's a lot of visibility just purely into Micron's potential earnings or SK Hynix. And they are up slightly, quarter point, but, you know, not as much as maybe you would think after NVIDIA raised their commitment so much, primarily due to memory costs.
And what's interesting is all of the neo clouds are green as well. So something doesn't make any sense. It doesn't make sense. Like, if NVIDIA is down, I would have assumed the neo cloud names would be down as well, but they're not. The semis are either flat or greenish.
Well, I don't think, no, I think that goes to point to Jose's point being right, is that the AI demand is definitely there. Chips are, you know, selling faster than ever. And actually, you can see them break down hyperscaler versus their other AI cloud. So there's more growth headed towards the neo cloud names than the hyperscalers. And then on top of that, Nvidia is willing to take on a lot of the risks. So just individually, this is not a statement about the AI trade. This is a statement about what's the risk level for Nvidia. But I think the risk level has always been higher from the purchasers of the chips, the ones with the mega capex bills. But yeah, they're just starting their bill, I guess.
To be fair, the stock is down 2%. I mean, it's 1.2%. Like it's not about the stock reaction that's compelling to be upset or excited about. It's more so about this commitment number that now creates a new category of concern, which again, I don't think it's an actual concern, but it creates a hurdle that the company will have to be able to articulate well enough to explain for investors to deal with. I mean, it's already the biggest company in the world, already majority of the S&P 500. This is just a new thing that they're going to have to break down. I would imagine, once again, it means they have a lot of visibility into demand. They've already hinted at that in the CFO commentary. So on the call, they would have to continue hinting at that. I mean, if the stock was up 5% after hours, I think the interpretation would be like, oh, they're spending all this money because they're going to make all this money. But because the stock's down a little bit, it might be seen as a negative.
People are saying, when is Jensen talking? I'm talking right now. That being said, the call is at 5. Jensen doesn't talk for a while. He joins during Q&A. So people always put up a bunch of comments during that. He does not do the initial numbers or the CFO commentary. He'll come in for Q&A. So you'll see his actual words around 5:30. So stick around for that.
NVIDIA CFO says we partner with an extensive network of suppliers to secure critical components needed to meet demand for next several years, maximum exposure under land, power, shell, guaranteed $3.5 billion. Yeah, I think that the entire call is going to be about them saying the reason we're doing this $500 billion financing thing, the reason we have all these commitments is because I think Jensen's going to be like, what are you guys talking about? This AI shit, this is going to the moon. And we have all the money in the world. We have the best margins. We have to spend this money. And we just bought back 20 billion of stock. Like, you guys can't really be mad at us. But we're going to keep proliferating the build out of AI. I think he's going to have a very optimistic tone here. And you might see the stock potentially flip on that narrative. Here is Gene Munster's take based on these earnings.
That's a win. It didn't hit that magic similar growth rates quarter on quarter, adjusting for China, but it is, I think that is a win. As far as the guidance, that was 3% upside last quarter. They guided 4.4% upside. So that magic number of 109, we did miss that. The stock initially, that initial trade-off was related to the gross margins. That one surprised me. I was expecting more of a gradual decline of the next year, not seeing that step down in the October quarter. But at the end of the day, we're splitting hairs here. I mean, we have the metrics. They miss fractionally. That's what we do. But I mean, the aggregate of this story is still very much intact. They're beating at a similar rate that they have over the past year. They're raising at a similar rate despite higher and higher numbers. And you have some of these big drivers still. Let's just look at SpaceX, for example. They want to do 8 gigawatt hours next year with the data center. I mean, just that alone, just SpaceX alone can become a 3% customer last year to a 10%. That will take the hyperscaler growth rate from the streets looking for 38% next year to the low 60%. There's still some meaningful drivers. So Mike, I think that yes, we didn't check all the boxes perfectly, but the kind of the story is very much intact.
So Cody, I look at, the kind of the setup here. Obviously, investors, the buy side has a little bit of skepticism, or they haven't felt motivated to really rush and urgently pay up for NVIDIA shares for a little while now. On the sell side, 63 out of 67 analysts have buy ratings. The consensus price target is for a 50% gain from here. The consensus price target implies a $7.5 trillion valuation for NVIDIA. So there's enough optimism as people who are looking at projecting the fundamentals. What do you think clients need to understand if, in fact, this stock is going to get unlocked to the upside?
Well, I think you've just got to factor in the continued growth of the name, and I think the stock will eventually follow. When you've got this kind of growth rate, even on the $100 billion of revenue, continuing to double their hyperscaler and their customer base year over year. And as Gene mentioned, there continues to be a lot of new opportunities out there in the future. And so I think if you put up the numbers, the stock will eventually follow.
We have 2 new disclosures from the press releases. Number one is one direct customer represented 16%, almost a fifth of the revenue.
Not
Microsoft.
New. Last quarter, they told us there are Their top 3 direct customers, 21% of total revenue, 17 and 16%.
Let them know, Neil.
Thank you.
So
Jose.
I
learned
guess
from the best.
I guess the trend of continued concentration is an issue. Does anyone want to guess who this is?
It's Microsoft.
How do you know?
There's been multiple claims before that Microsoft's been their largest customer, and I think Google's number 2.
Okay,
But
and then the other thing. Go ahead, Neil.
No, I mean, Gene just said that if, let's say, SpaceX magically go from 2 gigawatts to 8 gigawatts next year, they will become a 10% customer. So clearly, customers with a lot of capital can become much bigger, and then you have less concentration because suddenly you have another gigantic customer that pops out of nowhere, which is SpaceX AI.
Yeah, who have claimed to be
that it could be SpaceX.
Yeah, definitely could be exclusive to Nvidia as well. That's the important part. There's very big names, but they buy from AMD, they buy from Nvidia. Like they either have their own custom TPUs. Microsoft's a really big customer. They don't make their own silicon. Well, I mean, they've tried, but they're not as large as TPU or Trainium, and not big customers of AMD.
Neil, did they disclose their China revenue last quarter? Do you know?
Yeah, it was 0.
Oh, really?
Or close
I don't
to
think this
it,
is true, by the way. That I just read a report saying it was less than 1%.
Yeah, I
close
think
to.
China. I think China revenue is a bit different. Sometimes they still include consumer products, which can still be sold on Nvidia, on China. I think the big news here was that there was a 1% of data center, less than 1% data center of hoppers that did go to China. So that's the first time in a while that we actually have seen hoppers make it to China. It wasn't anything crazy, but that was kind of the big one of the new things here.
Yeah, there was a report halfway through July. So it was only 2 weeks where they were able to sell into China. Q3, I think, will be a very different story. And if you get an entire quarter of sales into China, including a step up or an easing from China halfway through in August that we just saw a report 10 days ago, that could be really good for China or for Nvidia, considering they're not guiding for any revenue, 0.
Okay, so you have one customer doing about 16% of the revenue, kind of similar to the concentration last quarter. 44% of the first half total revenue was from 3 direct customers, Nvidia put in the press release. They also incurred a $400 million charge in the first half of the year from excess H200 inventory. So that's interesting. Any thoughts on that, Jose?
Sorry, I was responding in the chat. I missed the question.
H200 is going to China.
Nvidia incurred a $400 million charge in excess H200 inventory in the first half of the year. Yeah, that was probably inventory that was supposed to go to China that didn't make it, right? Most likely. Okay, so it doesn't seem like that's the biggest deal.
Wasn't there also like a big H20 charge last quarter?
Yeah. Like 5 billion or 5.4 billion, something like that.
Yeah, I think a lot of people were upset about, it wasn't accounts receivable last quarter, but it was a different accounting metric that kind of exploded. I think commitments is the big one that people are talking about this time, but that's something Jensen will probably talk about. NVIDIA says it will be shipping both Blackwell and Rubin systems in the future and is currently experiencing certain supply constraints in their SEC filing. NVIDIA said that in August it had entered into MOUs with large capital providers, this is the big $500 billion deal, to create independent financing platforms to mobilize third-party capital. NVIDIA right there, flat.
Gene Munster said it really well. Like, we're splitting hairs on gross margin next quarter coming down 1%. Like, most of this stuff, we are looking at every minute detail. The 2 biggest details here is this is a company growing at 106% year over year. Guidance is honestly very similar to that level of growth if you include what they're likely to actually come in at. And then you also have their increased commitments. Those are the 2 stories. Extremely fast growing and potentially taking on a little bit more risk or believing that this build out is going to continue for a while. you could honestly look at that as a bullish sign, thinking that they believe that they have visibility into multiple years of customers of holding up $100+ billion revenue quarters. Like, I think the market's being crazy right now. Not only like the 2% being down, or, you know, right now 0.8% being down is fine, but it's off of the back of almost like an 8-day streak of being red. That's the part that's like frustrating me, is like, we are already down.
I think as this person says in the chat, nobody cares if the stock doesn't go up. I mean, they're right. Like, all these little things, we're going into the nitty gritty. No one cares. Everyone's like, the stock should go up. But you have to analyze this stuff, as Tanner says, to try to get a little bit more deeper into why it's not going up. And, you know, at the end of the day, it's been in a downtrend for the past week, as you said, and it might continue that downtrend until Jensen kind of gives more clarity here. Marvell is up after hours. It's quite interesting how the market's interpreting this earnings immediately, but the concentration risk is obviously still there. Whether it's Microsoft, Google, Amazon, Meta, they keep paying. I mean, 44% of the, what is it, 200 billion? No, like 180 something billion they've done this year in revenue was from the hyperscalers. And so at the end of the day, that concentration risk is there, but they continue to spend for a reason. They need the chips. You're seeing the AWS, GCP, Azure growth rates. So I don't know if that is the biggest bear case anymore. And then you have the commitments to make the entire supply chain make sense. Let's go back to Dario as he was talking with Benioff a couple minutes ago.
But this is the first time that we've really been able to incredibly accelerate our go-to-market efforts within Claude, and we want that for all the other enterprises. And me and Mark want to bring it together to everyone.
Oh, look, we see the numbers. We also see the tape underneath you. Salesforce, fantastic numbers. But I do want to ask you, I know I normally should ask Mark this, but I want to get to Dario. You know, there's this whole SaaS apocalypse thing, of which we thought that you were going to destroy Mark. I know Mark has a big investment in you, but I was waiting for you to put him out of business. What do you think about the SaaS apocalypse thesis?
We're not interested in destroying anyone. You know, we think of this as a very positive sum thing, right? That's the way markets work. We're creating new value here, and the question is just, you know, it's not about destroying anyone. It's about how much of these enormous gains go to various people and various companies. And our philosophy always has been that we want to work with our customers. We want to empower our customers to share these gains with us. And so we've already worked with Salesforce in a number of ways. We're big users of Salesforce. Salesforce is big users of Claude Code, of CoWork, of other tools. We've put products like Claude Tag in Slack already, which is a part of Salesforce. And now this combination is a way to gain something that's, you know, it's 1 + 1 = 3, something that's bigger than the sum of its parts. And I think that's the right way to think about things.
Jim, I think another point you really have to add to that, which is that, number one, this isn't our first product. You know, with Anthropic, we've got several products with them that we're so excited that we've built, including Slack Code. But Jim, you have to think of it like this. Salesforce is very much a deterministic system. It's a system that is all about security and rules and governance and workflows. And if this happens, that happens. It's about determinism. And now you have this incredible probabilistic system, these large language models, you know, this incredible technology that Dario has built. It's non-deterministic. But when you put these two things together, the idea that you could have a probabilistic LLM and AI that's working now perfectly with a deterministic system like Salesforce, the result is incredible. We would never have seen this kind of power, and our customers are going to build these amazing new applications dynamically. That is.
Jose or Tanner, any thoughts on what you're?
No, I was just going to make it. I was going to say Jim Cramer can borrow my hair when I'm done. But I'm curious on the thoughts of, like from Alex Karp's perspective, like, what does this say about sovereignty of AI? Is there going to be more comments about that? And also, what does that say about OpenAI's employees getting poached by Salesforce? You know, they're not poaching employees from Anthropic. I'm curious if this has been part of the plan as well. So those were just some of my comments there, not about the actual deal. It's a good deal.
Neil, you trust what Dario's saying here, that they're not trying to kill software companies?
If you go back to his very long post on X and you read what he wrote there, I'm really not surprised that suddenly he's popping up on TV trying to explain all of this, especially not when you're trying to go public in a month or two. So I'm not surprised. I mean, last year, Salesforce announced something, a collaboration with OpenAI, and now they have something with Anthropic. Okay, cool. But at the end of the day, Salesforce better watch their back, because I'm pretty sure that Anthropic and Dario are not going to think twice about ruining their business.
I mean, that would be kind of crazy, right? If Anthropic comes out with a competing CRM. Maybe Benioff did this to kind of create a relationship that would legitimize Anthropic, because there's a go-to-market in the enterprise, and also make sure Anthropic doesn't stab them in the back. But then again, business is kind of ruthless. If they were to do that, it would be quite surprising.
I mean, that's why Carp repeats it time and time again. You have to have all the controls, stop giving everything to these LLM companies. Otherwise, again, these LLM companies will do whatever it takes to survive, because they've been making an insane amount of commitments. Like OpenAI and Anthropic, they need to generate hundreds of billions of dollars in revenue. And if they have to burn your business to the ground, they will do it.
You don't trust them, Neil?
It's not that I don't trust them. It's just if they don't want to go bankrupt, I guess they have to find ways to make money. So I hear what they have to say, but I see something else.
Anthropic did a deal with Figure, and then like the next model update, they ended up showing off this Figma. And then the next model upgrade, they ended up showing off a UX UI product that looked a lot like Figma. So, who knows what's going to come of this?
It's a good point. It is a good point. We have about 7 minutes until the call. Jensen's not going to be speaking probably for another 25 to 30 minutes. They're going to have to get through CFO commentary. If you were an analyst on the call, anyone in the chat, and my three fellow panelists here, let's start with you, Jose. What question would you ask Jensen?
Just give me visibility. That's it. That's all I care about. Because I think that ends a lot of the other questions.
Yeah, no, I'll just copy Jose here, because any other thing I'll say just ties back to this. So
yeah, and then on top of that, I don't even know how I would phrase this question, but based on all the commitments, it's surprising. I'm sure you guys have all seen the reports. The Vera Rubin Ultra is actually expected to have less HBM than the Vera Rubin. So, like, how does that tie in with some of their commitments? And I don't even know how I'd phrase that question, but like they are downsizing or lowering the specs on their future products, but also putting up unbelievable commitments to memory.
So it would be a memory-focused question, basically.
Yeah, of course.
Is it a power play? Because if all of the customers / competitors are also trying to catch up, they need memory. But if Nvidia picks everything up, they don't have the memory to move fast enough. And so it's like 4D chess from Jensen.
Everything I do is a power play, okay? That's just what Jensen does. I hate the silence. The fact that you guys smile on mute drives me nuts.
What, you want us to like burst out laughing?
I want you to unmute to laugh.
Ha ha ha.
There we go. I was laughing at the awkwardness. I wasn't laughing at your joke. But anyway, what was I about to say? I would ask the most obvious question. What's going on with this open source thing? Right? Like, I mean, I would try to ask the question without being so direct, but I mean, are you legit competing with OpenAI and Anthropic? Do you want more enterprises to adopt Nemotron over the frontier models? And if they do that, is that bad for those companies? Will they adopt, or is there going to be a sliding scale where some stuff is frontier, some stuff is open source? Is the open source, like, look, if Nvidia you know, selling a decent chunk of open source tokens. Is that another line of revenue for the business that is kind of latching on to the data center? But I mean, I think the open source thing, along with this commitment stuff that Jose talked about, is a relatively big question. I think the customer concentration risk, we've heard that question at least once every time over the past couple of years. I don't think that's going to be the biggest question anymore, because these customers, Amazon, Google, Microsoft, are showing massive cloud growth, so they have to keep buying the GPUs. But that question might come out in the context of not customer concentration, but customer concentration and competition from those concentrated customers that are now seeing a lot of growth with Trainium and with TPUs, which again, I don't think is the most important question here, but I think we're going to probably hear some commentary around that.
The stock is barely down now, so
we saved it. You're welcome.
Broadcom's been taking a hit over the past couple of days. CrowdStrike's still up 11. Salesforce still up. I mean, you're still seeing the software name Salesforce up 13%. Last time Salesforce was at $232. January of this year. Actually, got to go back to December of last year. So it's been a while since Salesforce hit these levels. It's just Nvidia right here that's the one going down. I mean, granted, if Jensen says the right stuff and the street likes it, seeing this thing pop after hours, even though liquidity is not that strong, Marvell's up after hours as well, it would not be crazy to see it. Marvell's up 2%, and then Nebius right there up 2.3% as well.
Someone in your chat said, Amit, is that a wig? like you're the guy with the hair. And then people are like, wait a second.
It really looks like I have the wig. Like, that's crazy. Well, I have had my hair out for 3 days in a row for the first time, so I can understand people being confused. I actually like the hairstyle on you, Tanner. It's actually not that bad.
I forgot how Tanner looks without it.
If that was legit your hair, if it wasn't gray and it was black, I feel like it'd look good, to be honest.
No, dude. All the comments are saying I look like Karen or Jensen's grandmother or something like this. I should have dyed the mustache as well. I wasn't going to shave it. I wasn't that committed to the bit.
Rachel, thank you for the super chat. We love you, Amit and team. Thanks for always working so hard. Thank you all for being here. Deeply, deeply appreciate you all being part of our collective channel. Sipping, thank you for the super chat. Jensen, Tanner doesn't wake up a loser. That is correct. Appreciate that as well. Farzad, thank you for the super chat as well. Really appreciate you. I mean, it is cool for all of us across the world to come together. Oh, put in, so we got a minute until the call starts. Put in the chat where you're watching from. Where across the world are you watching this stream? This call should be starting in about a minute. Again, Jensen's not going to be talking for about 20 minutes, but we will be live after the call as Nvidia almost flips green right here to analyze everything that was said. And there you go. It does flip green. We'll break down what happens. 210 on Mr. Nvidia.
Now all the comments are going to be super happy whenever it opens green tomorrow.
See Dubai, Denmark, Slovakia, Poland, New Mexico, Israel, Portugal, Germany. Why is my sister calling me right now? I swear, my sister doesn't think I do a market close stream every day.
she wants to know why Nvidia is down. Or actually, it's up now.
Maybe. I can guarantee that's not what she would ask me if I picked up her phone call, but she usually calls every
Pick
time.
it up. Pick it up.
Yeah, put her on the stream.
Netherlands, Germany, Houston, Romania, Afghanistan, Texas, Austria. I got everyone across the entire world watching this. NVIDIA 21040. All right, you know, this happened last time. It bumped just a little bit going into the call. So now we just got to see if the call is good enough to keep it going. All right, having said that, the call is starting, and we'll be back in an hour to discuss what's going on.
Good luck, everyone.
If you would like to ask a question during this time, simply press star, followed by the number 1 on your telephone keypad. If you would like to withdraw your question, press star 1 again. Thank you. Toshiya Hari, you may begin your conference.
Thank you. Good afternoon and welcome to NVIDIA's conference call for the second quarter of fiscal 2027. With me today from Nvidia are Jensen Huang, President and Chief Executive Officer, and Colette Kress, Executive Vice President and Chief Financial Officer. Our call is being webcast live on Nvidia's Investor Relations website. The webcast will be available for replay until the conference call to discuss our financial results for the third quarter of fiscal 2027. The content of today's call is Nvidia's property. It can't be reproduced or transcribed without our prior written consent. During this call, we may make forward-looking statements based on current expectations. These are subject to a number of significant risks and uncertainties, and our actual results may differ materially. For a discussion of factors that could affect our future financial results and business, please refer to the disclosure in today's earnings release, our most recent Forms 10-K and 10-Q, and the reports that we may file on Form 8-K with the Securities and Exchange Commission. All our statements are made as of today, August 26, 2026, based on information currently available to us. Except as required by law, we assume no obligation to update any such statements. During this call, we will discuss non-GAAP financial measures. You can find a reconciliation of these non-GAAP financial measures to GAAP financial measures in our CFO commentary, which is posted on our website. With that, let me turn the call over to Colette.
Thanks, Toshiya. We delivered another outstanding quarter with record revenue, operating income, and EPS. Total revenue of $96 billion, more than doubled year over year as growth accelerated for the fourth consecutive quarter. The surge in AI demand is driving a global infrastructure build-out, supported by an expanding and diverse set of growth opportunities, spanning hyperscalers, AI labs, AI natives, enterprises, and sovereign customers. We expect to grow revenue by approximately 70% in fiscal 2028. This is a supply-constrained outlook. Q2 data center revenue increased 18% quarter over quarter to $89 billion, with strong contributions from both sub-segments, hyperscale and ACI&E, which includes our neocloud, industrial, and enterprise customers. Hyperscale revenue of $49 billion grew 13% sequentially, driven by sustained strength in Blackwell, reinforcing that more compute drives more revenue. As new GPU capacity comes online, our hyperscale customers delivered strong financial results in the quarter with accelerating revenue growth and expanding margins. With cloud industry backlog now greater than $2 trillion, CapEx by the top 5 hyperscalers is expected to reach nearly $800 billion in 2026 and $1.3 trillion in 2027. Today, we are delighted to announce an expansion of our partnership with AWS. Building on its already vast installed base of NVIDIA compute, AWS is deploying an additional 2 million GPUs starting this quarter through the second quarter of fiscal 29, along with Vera CPUs, some integrated with Rubin, others standalone. AWS will serve NVIDIA Nematron family of open models on Amazon Bedrock and SageMaker. Amazon will also adopt our full physical AI stack, Omniverse, Cosmos, Isaac, and Jetson, to power its fleet of warehouse robots. ACI&E revenue of $40 billion increased 25% sequentially and 138% year over year. Growth was driven by neocloud capacity additions to meet the rising demand from enterprises, AI startups, and sovereigns, as well as hyperscalers purchasing capacity to supplement their own buildouts. Using NVIDIA DSX reference designs, our neocloud partners are bringing capacity online faster and at lower token cost. They are expected to exit the year with 8 gigawatts in total installed capacity, up from approximately 3 gigawatts at the end of 2025. Incredibly, we are seeing demand acceleration even at our scale. Customers' forecasts point to our growth doubling next year. However, as I mentioned earlier, we expect to grow approximately 70% as we are supply constrained. NVIDIA compute is fully utilized across every cloud we serve, the economic value it generates for our hyperscale, neocloud, and AI lab partners keeps rising. Besides building the best AI computing technologies and the most capable supply chain, NVIDIA has 3 unique capabilities that are engines powering our growth. First, NVIDIA's architecture runs every model, and we're growing share as closed and open model adoption grow. Closed and open models alike, adoption is skyrocketing. NVIDIA runs the leading closed models, OpenAI, Anthropic, Grok, Meta, Gemini, and the leading open models, TML, Mistral, Quinn, Kimi, GLM, DeepSeek, Minimax, and Nematron. We're great at small models and giant ones, large or video, auto, regressive, or diffusion, in the cloud or in the edge. NVIDIA is great at training, great at inference, great at agentic workloads. One platform, fungible for every model and workload, durable for the entire life cycle of AI. That combination of performance, fungibility, and durability is what makes NVIDIA the productive and financeable compute infrastructure. Our second unique capability is our full stack AI factory platform that is expanding our share of the data center TAM. Since Hopper, our revenue opportunity has grown from roughly 18 billion per gigawatt to 25 billion with Blackwell, to 40 billion with Vera Rubin, which now spans Vera CPU, Rubin GPU, NVLink, InfiniBand or Ethernet, and Grok LPU announced earlier this week. Our ability to extreme code design across GPU, CPU, NVLink scale-up networking, scale-out networking, systems, algorithms, and software enables us to deliver X-factor performance gain every generation. Vera Rubin exemplifies this, delivering 30x higher throughput per megawatt and 35x lower token cost relative to Grace Blackwell Ultra. We commenced production shipments of Vera Rubin earlier this month. Having already received purchase orders from every major hyperscaler, AI cloud, and system OEM, we expect Vera Rubin to mark the fastest product ramp in NVIDIA's history. Our networking business had another record quarter with revenue growing 18% on a sequential basis. Spectrum X Ethernet, which grew 2.6x on a year-over-year basis, is already helping us become the largest and fastest growing network company in the world. Rising adoption of agentic AI is driving an acceleration in demand for data center CPUs. Our Grace CPU, introduced in 2021, has been a great success, with revenue on a trailing 12-month basis exceeding $5 billion. Today, we are in full production of our next generation Vera CPU. As a standalone product, Vera expands our TAM even further. Vera completes agentic tasks 1.8x faster on the spec benchmark and provides 5 times the bandwidth per watt than any other data center CPU. We expect Vera to be deployed by every major hyperscaler, neocloud, AI lab, and system OEM, with shipments already underway to our lead partners, including OCI, SpaceX AI, and starting this quarter, AWS. We continue to see demand for approximately 20 billion in total server CPUs. And based on our customer demand and improving supply outlook, our preliminary expectation is for CPU revenue to more than double in fiscal 28, positioning us as one of the world's leading server CPU suppliers. Since the announcement of our Grok partnership last year, we've been working to unite NVIDIA's high throughput and Grok's high interactivity architectures. At Hot Chips earlier this week, we announced that Grok 3 LPX, our first rack scale LPU system, is in full production and already setting records, demonstrating nearly 4x the number of tokens per second against the next best alternative on our artificial analysis benchmark. We expect to ship Grok 3 LPX in volume later this quarter to early adopters. Nebius will be the first. Today, we're not just selling the best chips, we're selling a full stack AI factory platform, offering superior economics for customers and capturing a bigger share of the data center TAM. Our third unique capability is the combination of our full stack AI factory and rich CUDA ecosystem, allowing us to extend AI into markets a single chip alone can never reach. Beyond the hyperscalers lies a massive market anxious to adopt AI, customers with no interest in designing their own custom silicon. NVIDIA's fully proven full stack platform is uniquely suited to help sovereigns, neoclouds, and enterprises build their AI infrastructure, bring it to full operation, continuously optimize it through CUDA software, and connect it to offtake demand from our vast developer ecosystem. Hyperscalers will remain a major growth driver, but non-hyperscaler growth, our AIC and E segment, spanning sovereign, regional neoclouds, enterprise, edge, and air-gapped data centers, will represent roughly half of our data center business. Our AI native startup ecosystem, developed and running primarily on the NVIDIA compute platform, is scaling at a rapid pace. Global VC funding in AI, roughly 70% of which is spent on compute, exceeded $400 billion in the first half of 2026, surpassing the $265 billion raised in all of 2025. Nearly 20 companies, including Cursor, owned by SpaceX, Figma, and Together AI, now exceed $1 billion in annualized run rate revenue, up from 13 companies in Q4 of last year, with vertical enterprise software logging the fastest growth. In enterprise, on a trailing 12-month basis, on-prem revenue in the automotive vertical reached $8 billion, while financial services, manufacturing, and healthcare combined contributed $7 billion in revenue. Hudson River Trading and Jane Street are leveraging NVIDIA's powered AI factories to accelerate quantitative trading. Samsung Electronics is using NVIDIA Cullitho to achieve up to 20x greater performance in computational lithography, while Bristol Myers Squibb is investing in Vera Rubin AI Factory, a fast follow to the Roche and Lilly buildouts, as drug R&D timelines compress from years to months. In sovereign AI, our business, primarily through the regional neoclouds, grew 35% sequentially and more than tripled year over year in Q2. A country or region can allocate land and power directly to a regional cloud partner in ways it never would to a foreign hyperscaler. We don't own a cloud ourselves. We are a neutral partner to every sovereign and neocloud. And because NVIDIA compute is productive, fungible, rentable, and durable, regional cloud interest is surging around the world. We helped CoreWeave, Nebius, and Nscale build entire infrastructure businesses, and neoclouds are emerging everywhere. Firebird in Armenia, Cassava Technologies across Africa, GMI Cloud in Taiwan, Yoda and NASA in India, Firmus in Australia, YTL AI Cloud in Malaysia, pairing local land, power, and operating expertise with our platform. Last month, we announced a partnership with Noetra, Japan's national AI company, to build an NVIDIA DSX AI factory that will create open models to power AI agents, digital twins, robotics, and physical AI applications. South Korea's LG and Hyundai Motor Group are partnering with NVIDIA to build and scale AI. And in Europe, a record 35 new NVIDIA-powered AI supercomputers were unveiled to advance industry and scientific breakthroughs. Neoclouds are seeing strong demand pipelines from many diverse off-takers. Rather than allocating their entire capacity to a single long-term offtake guarantee that lenders typically require to finance a data center independently, we have introduced a revenue sharing structure. NVIDIA provides a take-or-pay commitment on a portion of the facility's capacity, a minimum revenue guarantee that gives lenders the confidence to underwrite the project, and in exchange, we share in a portion of the NeoCloud's revenue earned above that floor. Independent capital still underwrites every deal on its own merits. We're not making loans. In this model, we get paid twice, once on the hardware sale and again through the share of rental revenue, a highly reoccurring stream layered on top of a one-time equipment purchase. Over time, this model can expand our addressable market and create reoccurring usage-linked revenue stream alongside our core platform revenue, with the potential to drive billions in revenue over the medium to long term. Together, NVIDIA's three unique capabilities: a platform that runs every model, a full stack AI factory platform capturing more of the data center TAM, and a CUDA ecosystem that extends AI into markets no single chip could reach alone, reinforce one another, and are the engines of our growth. Let me update you on our progress with our Frontier AI Labs. The Frontier AI Labs have extraordinary demand for training and inference compute, but they are growing faster than what their balance sheets and credit profiles can support. They have rapidly growing customer demand, yet still lack the decades-long infrastructure contracts and investment-grade financing capacity needed to secure the AI factory infrastructure independently. In other words, their growth isn't limited by their technology or customer demand. It's limited by compute. For these companies, more compute means more intelligence, more users, and more revenue. NVIDIA is needed to help power this flywheel. First, we've invested nearly $50 billion in the Frontier AI Labs. This was a meaningful commitment, but it represented a small fraction of our expected free cash flow over the same period. Further, to support the Frontier Labs infrastructure buildouts, we recently announced partnerships with 6 of the world's leading infrastructure capital providers: Apollo, BlackRock, Blackstone, Brookfield, Goldman Sachs, and KKR, to establish financing platforms that will raise over $500 billion of third-party capital. With these partnerships, building on our unique, fungible, and durable computing platform, the AI Labs will be able to build and assess AI infrastructure funded by long-term institutional capital at relatively attractive rates. Last week, we announced that we secured land power shell capacity through our partnership with SoftBank Energy to exclusively host NVIDIA compute at their Portsmouth campus. The initial deployment, expected to support 4.25 gigawatts of AI factory capacity, will be utilized by OpenAI. Each generation of NVIDIA AI factory systems deployed at Portsmouth could represent approximately 1.5 million NVIDIA GPUs. And over 20 years, the site could support multiple upgrade cycles. Here's the essential economic point. The LPS commitment secures a long-lived AI factory site, while the NVIDIA compute within the data center can be upgraded repeatedly. This project deepens our long-standing partnership with OpenAI. OpenAI has committed to substantially deployments of NVIDIA AI infrastructure through 2030. OpenAI's existing and planned commitments represent approximately 12 gigawatts of NVIDIA compute. For another Frontier AI Lab, we will provide selective credit enhancement for nearly 2 gigawatts of compute. This complements the substantial NVIDIA compute capacity they've secured independently without NVIDIA's credit support. We recognize the scale of this support, and we know some will call this circular financing. We see it differently. We're going through a major computing platform shift, the creation of one of the most important technologies in human history, and these are once-in-a-generation companies. Their technology leadership is proven, and their customer traction and usage are skyrocketing. We expect them to become the largest technology companies in history. We believe these investments, measured against the strength of their demand, the business they create for us, the ecosystem they build on Nvidia's platform, and the equity returns on our invested capital will be excellent. And our risk is limited. The Nvidia compute platform is fungible and durable and can be redeployed to support other customers. For context, we expect demand from the AI labs, for which we expect to leverage our balance sheet to contribute toward roughly a quarter of our business next year. This remains compute we ship will be consumed by investment-grade customers or those that are backed by one. In Q2, we shipped less than 1% of our total data center revenue in Hopper 200 products to customers based in China in accordance with the US government licenses. Current Hopper shipments are dilutive to corporate gross margins. And given ongoing geopolitical uncertainty, there is no China data center compute revenue in our forward outlook. Moving to the rest of the P&L, GAAP and non-GAAP gross margins were both 75%, largely unchanged from last quarter due to a similar product mix. GAAP and non-GAAP operating expenses were up 10% and 11% sequentially, primarily due to high compute infrastructure costs and compensation and benefits costs. Our non-GAAP effective tax rate of 16% increased from a year ago, primarily due to higher revenue. On our balance sheet, inventory increased to $32 billion as we prepared for the Vera Rubin launch. Days of sales outstanding increased to 60 days, reflecting extended payment terms for large purchases by certain investment-grade customers to be shipped over multiple quarters. In Q2, we returned a record $26 billion to shareholders, $20 billion through share repurchases, and $6 billion through our quarterly dividend of 25 cents per share. Relative to our plan to return 50% or more of free cash flow, we have returned 60% on a year-to-date basis. And going forward, we intend to increase and return excess free cash flow net of strategic uses. Let me turn to the outlook for the third quarter. Total revenue is expected to be $108 billion, plus and minus 2%. We expect sequential growth to be driven primarily by ACI&E with data center, while growth in hyperscale is expected to re-accelerate in Q4 and into fiscal year 28 as supply of Vera Rubin grows over time. We see Vera Rubin accounting for about 20% of data center revenue in Q3. Looking ahead, our preliminary expectation is for fiscal year 28 revenue to grow approximately 70% year over year. Although we will work to close the supply-demand gap, we expect supply to remain a bottleneck at least through the end of fiscal year 28. Many of you have expressed concerns regarding our gross margins as component costs have risen significantly. As you are already aware, we are experiencing extreme pricing conditions in memory. The magnitude of the price increase has exceeded our prior expectations and are headed even higher into next year. As a result, we are resetting expectations today. For Q3, we expect GAAP and non-GAAP gross margins to be 74%, plus or minus 50 basis points. We expect margins to bottom in Q4 in the 71 to 72% range, before settling at 72 to 73% in fiscal year 28 as executed price increases take effect in Q1. We want to be direct about this rather than let it linger as an open question. Memory scarcity today is being driven in large part by the AI build-out itself, and unlike a component that simply raises our cost with no offset benefit. Tighter memory supply is a symptom of the same demand surge that's driving our own growth. We have long-standing, deep relationships with all three major memory suppliers, and we're working closely with them to further increase the capacity our roadmap requires. GAAP and non-GAAP operating expenses are expected to be approximately $9.2 billion and $9.0 billion, respectively. For the full year, we now expect OpEx to grow in the low 50s, driven by a broadening of our product portfolio and further increase in the usage of AI tools, which is already and will continue to enhance engineering productivity. For full year, fiscal year 27, we continue to expect GAAP and non-GAAP tax rates to be between 16 and 18%, excluding any discrete items and material changes to our tax environment. With that, we will now transition to Q&A. Operator, please poll for questions.
At this time, I would like to remind everyone, in order to ask a question, press star, then the number 1 on your telephone keypad. We'll pause for just a moment to compile the Q&A roster.
While that happens, crazy earnings. I think this was amazing.
The line of Joseph Moore with Morgan Stanley. Your line is open.
Great, thank you. I wonder if you could give us color on the 70%, and what gives you the confidence to guide a full year out? You haven't been doing that. And then what's the gap between that amount of growth and the 100% demand growth? You know, what is the kind of key constraint that separates those numbers, and could you close those gaps over time?
Yeah, thanks, Joe. As you probably are aware, AI has become useful, and the AI agents that are being adopted everywhere use an enormous amount of compute. First of all, the large language models are larger than ever because they're smarter than ever, and these agents go through reasoning and planning, multiple turns of tool use. The amount of compute necessary for an agent versus a human using it is probably 15 to 100 times, depending on the type of problem you're trying to solve. And so the amount of compute necessary is just extraordinary. That's a factor that almost everybody sees. The part that people don't see about our growth, because we're practically singular because of the nature of how we deliver products. I mean, we're the only company in the world that creates and builds, offers an entire AI factory platform, a full stack system. And, you know, customers can still mix and match. However, most companies just don't have the skills to do that or desire to do that. And so there's an entire part of the market that we experience grow. There's sovereign AI, the regional AIs, they're neo clouds, they're AI startups, they're enterprises, where we're seeing, which represents about half of our business, and that's growing 100% a year. That part of the world's computing is likely to be larger over time than even what we're currently experiencing in the cloud. And so, so I think the demand that we see is driven by all of those factors. It is also the case that you can no longer procure technology per se and stand up these infrastructure. You've got to go secure the land, power, and shell, which, you know, oftentimes is a couple, 2-3 years out. All of the rest of the supply chain necessary to align the construction, the power, the cooling, you know, all of the labor that's necessary. And AI infrastructure is creating so many jobs all over the United States and all around the world. It just takes a lot more planning. And so we're involved in securing infrastructure now, further down the pipeline. You know, just as a long time ago, people asked me, why is it that we're working with memory suppliers when we're a chip company? And today people understand it's really quite genius that we were working on our supply chain so far upstream. We work with power generator companies. We downstream. We work with land, power, and shell companies all around the world, and that helps prepare all of this computing that's going to be built
that will ultimately deploy for our ecosystem and our customers. And so we just have a lot greater visibility now, upstream and downstream. It is the case that we've never forecasted or never guided to a year in advance. And even though our demand is much greater than 70%, our supply allows us to confidently deliver 70%. And we're going to continue to work with our supply chain to increase on that. But what we wanted to do is to be consistent with everybody, from our customers, our shareholders, our supply chain. Everybody sees the same view. And the reason why that's important is because, everybody's putting a lot of resources at play. And so we wanted to make sure that everybody has the same set of information. And we've got a huge year coming up next year. And it's going to be pretty extraordinary.
Your next question comes from the line of CJ Muse with Cantor Fitzgerald. Your line is open.
Yeah, good afternoon. Thank you for taking the question. There's tremendous investor focus on your inference market share. Can you speak to the evolving workloads you're seeing with agentic AI and how you see your share evolving here over time, particularly when you reflect on the growing value of the TAM you're seeing with each new full stack generation, your expectation for greater growth from ACIE, and then also including Grok 3 LPX? We'd love to hear your thoughts.
Yeah, thanks, CJ. The AI lifecycle is getting way more complex than it used to be, and it's playing into Nvidia's architecture much more greatly than it used to be. And so you could kind of see it as 4 phases. There's the first phase, which is preparing all of the data that you need. Some of it is synthetic, some of it is real, some of it is human labor and human labeled and generated. Pre-train the models, and then there's post-training, the third phase, and then there's the agentic inference. And agentic inference is extremely complicated. And so every one of those phases are complicated. The thing that's really great about the NVIDIA architecture, and we created this with NVLink 72, and it was a big surprise on the world when we first created the world's first rack scale architecture. It was hardly easy, and it was very challenging building the first generation. We're now in our 3rd generation of NVLink 72 rack scale systems. We had to reinvent the entire supply chain, reinvent systems, reinvent the technology, redistribute our software, refactor our software. Everything, every aspect of it was hard. But what it allowed us to do was to create one fungible system that allows us to transition from data creation, data preparation, to pre-training, to post-training, to agentic inference. The benefits to customers is incredible. And the reason for that is because you've just spent, and we just mentioned, each gigawatt of technology and NVIDIA's revenue exposure in the Hopper timeframe with Hopper plus InfiniBand, and now Vera Rubin and CPU, and 3 types of different networking, because it takes that many types of networking to address the entire world's data center, not to mention the scale-in security networking and the scale-across multi-campus networking. So you could argue 5 different types of networking systems, and then of course Grok. And all of that increased our revenue contribution or revenue opportunity per gigawatt to $40 billion. So each gigawatt of data center increased from, say, $30 billion about 5 years ago to now $60 billion today. Of course, the productivity is tremendous. The performance is incredible in comparison, but you're talking about a $60 billion investment. And to the extent that you could use it across multiple phases of the AI lifecycle, run every single type of model you can imagine running on it, whether it's diffusion or autoregressive or state space or some hybrid version of that, every version of attention mechanism you can think of, small or large models, the investment that you make will be preserved and useful and productive for a lot longer time. And so I think our advantage in this new world is really quite extraordinary, and it could explain why it is that our growth is actually accelerating. It was already large, but now it's accelerating. Let's see, you asked about Grok. I was super excited about Grok 3. We achieved a record token interactivity rate, extremely low latency performance generation. The team is doing fantastically. We spent the last several months fusing the NVLink architecture, which will be the core, and it'll be the core engine. And then for services that would like to have super high interactivity, super high speed token generation done, the throughput is going to be a lot lower. The cost per token will be higher, but you could associate it with high ASP services. And so for those companies, you could bolt on one of our Grok accelerators. I'm super excited about that. But the vast majority of the world's data centers will just be Vera Rubin NVLink 72.
Your next question comes from the line of Stacy Rasgon with Bernstein Research. Your line is open.
Hi, guys. Thanks for taking my question. So the 70% growth in fiscal 28, which I guess is sort of calendar 27, so that's something like, I don't know, a $200 billion uptick versus the prior outlook. If I back it out, the prior outlook was $1 trillion over the 3 years. So this is probably 200 billion more. I was just wondering if you could talk us through the contributors to that increase across the different products of Vera and CPUs and Grok and everything else. And also, you talked about your price increase that takes effect in Q1. So I assume some of this is pricing. And I guess I'm also curious, maybe I'm squeezing too many questions in here, but I'm also curious, just it's a constrained number. What would it be if it wasn't constrained?
The unconstrained would be a lot higher. It's we grew 100% year over year this year. The unconstrained, is significant, and so we're just going to have to go work hard to get more capacity. And we have a large supply chain. We have a really gigantic supply chain, and so we have incredible partners, and we've secured a lot of supply, but we just need a lot more. To break it down, the way to think about that is most people see just hyperscalers, and that's half of the picture. The other half of the picture is what we call AC, and that's all the enterprise, the neo clouds, the sovereign AIs. That part of the world is invisible to everybody, and the reason for that is because they don't buy custom chips. They don't buy chips one at a time. They really need an entire factory platform built for them. And so that's a space that we add just a tremendous amount of value. Now, of course, back in this hyperscale space, that's growing incredibly too, right? You know that they now have backlogs of $2 trillion. You know that when they stand up NVIDIA compute, when that happens, their revenues go up, their earnings contribution go up. Compute is profitable, very profitable today, and compute directly translates into increased revenues. And so there's just a race to want to bring more NVIDIA compute online, both at the hyperscalers, but what you don't see is just really tremendous opportunities outside of the hyperscalers. But the other part of it is, and it's the reason why we mapped it out for you. In the case of Hopper, we were at about 18 billion per gigawatt. For Grace Blackwell, we're about 25 billion per gigawatt, and for Vera Rubin, it's about 40 billion per gigawatt. And the productivity is, X factors increase in each generation, and so customers want to race to the next generation as fast as they can. Meanwhile, because NVIDIA's compute is so productive, the tokens they're generating, the GPU hours they're renting out, is insanely profitable. As you know, their margins are fantastic, and so all of that is just simultaneously happening. I think the big picture is that we're going through this platform shift, and it affects every computer company, and every industry in the world uses computers. So therefore, every industry is affected. Every company is affected. And this new way of doing computing is intelligent. It's not based on retrieval of files, but it's now generating intelligence. And that requires compute. But the results you get is phenomenal. The results you get is tremendously better. And so, we're just seeing that across the world. Everybody wants to be part of the AI revolution. Everybody will have to be part of this computing shift, and everybody has to build infrastructure.
Your next question comes from the line of Vivek Arya with Bank of America Securities. Your line is open.
Thanks for taking my question, and thanks for providing all the transparency and all the commitments and guarantees that you have for a number of years. When I just add up everything that's in the CFO commentary, I get to a number of about 500 billion or so, obviously over the next several years. So I had a few questions related to that. First is that the takeaway, that the sum of all your ecosystem investments over the next several years is in that ballpark, or are there other equity or other investments that could still be ahead? That's one. Secondly, if there is a specific cash, part of that that we should think about in fiscal 28. And then, Jensen, a lot of these investments are, designed to help the frontier labs, especially OpenAI and Anthropic. But both of them are designing their own custom chips. In fact, OpenAI just, in the last few days spoke about Jalapeno and their claims about being better than Blackwell and so forth. So how are you balancing this dynamic where you want to invest a lot of the ecosystem, but part of that ecosystem wants to develop competitive solutions? Thank you.
Well, we're building something very different. Whereas many of these XPUs are inference-specific chips for one cloud or one service, NVIDIA is a platform, an entire AI factory platform that spans the entire AI lifecycle that you can use in any cloud. It's in every cloud. You can run anywhere. We'll help you set it up anywhere. And so we built something very different. All of the AI services at some point are going to want to go around the world, and those data centers won't necessarily be just built by them. And also, I fully expect, and so they're going to run, and I think they're going to run on NVIDIA all around the world. And of course, I think our technology, I have 100% confidence that our technology will continue to be extraordinary for them, and that the economics of using our technology, whether it's from data processing to training, to post-training, to agentic processing, our technology is going to be extraordinary for them. They're going to use it. And so I'm very confident that they're going to be customers and partners of ours for a very long time. Now, having said that, taking a step backwards, investing in these two companies, or there are several AI labs that we've invested in, investing in these companies are once in a generation opportunity. I think the only regret that I have is that I didn't invest more and sooner. And two of the companies will likely go public soon, and others will follow. And these will be some of the most consequential technology companies in history. And so I'm delighted to be their friend. I'm delighted to partner with them. I'm delighted that they're building an ecosystem on top of the NVIDIA architecture. I'm delighted that they're counting on us to scale up. And I have 100% confidence that, through quite a long period of time, they're going to be utilizing NVIDIA compute for a lot of their computing. And so I feel great about it.
So Vivek, let me add a little bit more regarding the commitments and the portion within those commitments, which is our supply commitments. This is essential. This is essential for the raising of Vera Rubin today, as well as all next year. You can see that those commitments, the biggest parts of them are in the first 3 years, and we will use that to build the products that we need. This would also gives us the confidence in terms of our growth and revenue, given how much we have already aligned in commitment in terms of our supply, as well as capacity that we would need.
Your next question comes from the line of Timothy Arcuri with UBS. Your line is open.
Hi, thanks a lot. Jensen, I wanted to ask about open source. There's a lot of talk about that these models could gain share for workload in the US. You're obviously well positioned with Nemotron, but on the other hand, a lot of the end demand is being driven by these big frontier model companies. So there's a lot of investors that equate open models as being negative for the growth of those companies. So how do you sort of put and take that? Do you see the rise of open models as being good for NVIDIA or ultimately negative? Thanks.
The world will need both closed models and open models. And both closed models and open models are skyrocketing in use. I would say nearly all open models run on NVIDIA. And the reason for that is because NVIDIA's footprint around the world is the highest. And our architecture is the most fungible. It's everywhere. It's in PCs and edge devices like DGX Spark, which is doing great, all the way to robots and workstations and your on-prem data centers. Open models are doing incredibly well. You know, closed models we know are doing incredibly well. The frontier labs, their sales are skyrocketing. Their margins are fantastic. They're generating profitable tokens. They're only limited by the amount of compute. That is equally true for open models. And our position in open models is very good, you know, because the CUDA ecosystem is literally everywhere. The open models are also foundational to just about every AI startup and every enterprise company around the world. It's vital to them. And the reason for that is because you should rent intelligence, strong intelligence, smart intelligence wherever you can, which is the reason why, you know, we rent it. And I encourage my employees to use the cloud services as much as they can. But every major company and surely every country and every startup needs to build their domain specific, their proprietary AI, their proprietary alpha. And the open models reaching frontier levels has made it possible, has enabled them to all do that. One of the areas where frontier models is vital is cybersecurity. You see the number of cybersecurity companies that are enabled by frontier models so that they could have distributed, massively distributed, continuously running autonomous cybersecurity systems to defend. Those companies are emerging. There's some amazing companies. They couldn't do it without open models. And so open models is both incredibly successful and has finally reached the frontier, but it's also vital to the American economy. It's vital to the world economy. It's vital to companies to build their own proprietary AI. You can't do it without one or the other. Both are going to be extraordinarily successful. And lastly, as you know, our market footprint of all AI models, I think we're the only platform, I'm fairly certain we're the only platform that runs every frontier model. And whether it's closed or open. Most of them were built on NVIDIA, and so they run great on NVIDIA. And so we're delighted by any model succeeding. So long as models succeed, I'm very happy. And both closed and open models are going to succeed, and they're both simultaneously driving our sales.
Your next question comes from the line of Ben Breitzes with Melius Research. Your line is open.
Yeah, hey, thanks. I wanted to ask you a question, Jensen, about demand in a different way. You know, you talked about demand growing 100% next year, and I wanted to kind of get a sense for a couple things driving that and even beyond that. And there's two concepts here. There's recursive self-improvement, which apparently at Anthropic and OpenAI is going very well with, you know, AI that improves itself. And even OpenAI said they could hit AGI by the end of this year. And, with the developments in RSI as well as AGI, what happens to industry demand? Does it inflect further? And what does it mean for NVIDIA when those things take place? And how are you looking at that as a demand catalyst? Thanks.
I appreciate that. It's going to inflect further. Today, the vast majority of AI is prompted by people. I believe that this last month it has crossed. Most AI are now agentic, but in the future, every company will have a whole bunch of agents. We have 40,000 employees roughly. In the future, we'll have 400,000 agents, 4 million agents, and those agents are running continuously. They're running in the background. If you know anybody who builds edge, personal AI agents, and they run it on their like a DGX Spark, and I know a lot of people who run it on DGX stations. This incredible workstation that we've built, and you can buy it from Dell, and they're incredible. And these AI agents running on a DGX station runs 24/7 because you got stuff for it to do all the time. And so when the world goes to fully agentic systems, you're going to have agents running all the time, working with other agents running all the time, and those will be working in the background, improving your company, improving your lives. In a lot of ways, we're kind of recursive at this point, and you could argue it's coarse-grained, but every time you run through an agent, it reflects on how it could do a better job next time, and it updates the skill file. And so the skills document, the markdown, is updated at the end of every single one of them. And so next time you run it, it's going to get better. It's a kind of a loosely coarse-grained self-improvement. And so you see that all over, always. And so in a lot of ways, and for many tasks, we could say that we've already achieved AGI. I think all of those milestones and all those, they're kind of senseless at this point. I think the most important thing that matters for the industry is that, one, AI is now doing productive and useful work. Two, AI is generating profitable tokens. And three, if we had more compute, we could generate more profitable tokens, which results in more profit for all of the services. This is the exact phase where we're at, which is the reason why everybody's leaning in.
Your next question comes from the line of Jim Schneider with Goldman Sachs. Your line is open.
Good afternoon. Thank you for taking my question. If you think about the 100% growth you talked about in terms of the unconstrained demand growth you're expecting, the 70% you expect to fulfill in terms of supply, can you maybe talk about or rank order some of the most acute constraints, whether that be things like data center power and shell availability, DRAM, wafer foundry availability, et cetera? If you could maybe help us understand, which are the biggest among those, that would be very helpful. Thank you.
There's something funny I could say, but I'm going to just not. Last year, one of the funnest things to do is just to go figure out where I go for dinner and who I have dinner with. And their stock price doubles the next day. I think the answer is our entire supply chain is challenged, and it's everybody is really running flat out. And more capacity is coming online all the time, which is one of the advantages. What's going to happen this year? It's not going to come online in just an instance in time, but it's going to come online every day. Yields are going to get improved. We're going to be doing yield improvement. We're going to work hard on working with every one of our suppliers, and so it's not even next year yet. And so we've got lots and lots of time to work hard every day. And so at this moment, we have supply for 70%. We have more supply than 70%, but about 70%. Our demand is much higher than that. And we've got to go work hard, or, we're going to be disappointing customers. And we like not to disappoint our customers. and we like to work hard for them. And so I'm going to need the help of the entire supply chain to help me out here. But they all know that. What I'm telling you about our needs for next year is exactly consistent with what I've told them. Everybody's on the exact same song sheet, and I'm trying to be as transparent as we can because we're talking about big numbers.
Your final question comes from the line of Aaron Rakers with Wells Fargo. Your line is open.
Yeah, thanks for taking the question. I want to go back to the gigawatts, the 25 to 40, and maybe try and understand, like, I think Jensen, you said at some recent conferences that, that's going to further scale. So, as we think about the path even beyond Vera Rubin, we think about Vera Rubin Ultra and so on and so forth. Like, should we really conceptualize like 40 billion goes to 60 billion, 80 billion? And then, I guess, underneath of that question is how do we kind of think about your ability to scale the capacity deployments? Is it a linear function, or is there something that, kind of unlocks your ability to supply more demand as we look through fiscal 27?
Great question.
Or 28, sorry.
Yeah, great question. Great question. And very simple. Is our goal to put as much compute on a plot of land? Is our goal to put more compute into 1 gigawatt or less? And so obviously, we would like the speed of light answer. The perfect answer is actually infinity per gigawatt. And so if we could literally get $1 trillion of compute into 1 gigawatt and one piece of land power shell, it would be a fantastic outcome. And so the answer is directionally in that direction. We started in the world of general purpose computing during Moore's Law. We were probably, pick your favorite number, but I'm going to go with something like $5 billion, $3 billion per gigawatt of compute with general purpose computing. And then eventually with Hopper, it was 18. Now Grace Blackwell is 25. Next, Vera Rubin is 40. And after that, it's going to be higher. And that's excellent. That's fantastic for the industry. It's fantastic for customers. So long as the productivity of it continues to grow, the durability and the fungibility continues to grow, then people are happy to invest in assets that generates revenues, generates profits, and helps them recoup their returns so incredibly fast. I mean, I heard the other day that return on investment capital is now less than a year. And we're talking about $50 billion data centers. And so that tells you something about the productivity of NVIDIA's technology and the rentability of it. I want to thank all of you for joining us today.
Slam dunk.
At this time, Toshiya Hari, I turn the call back over to you.
Thank you. Before we close, please note that Jensen will be participating in a keynote fireside chat at the Goldman Sachs Communacopia and Technology Conference in San Francisco on September 10th. He'll also be giving a keynote at GTC Berlin on October 21st. Our earnings call to discuss the results.
Okay. That was the call. Obviously, when we got the numbers, the probably craziest numbers we've ever seen from a company, stock fell 2%. It has reversed. We got above 220 for a little bit, but we've been getting rejected at 219, up 4% after hours. There's a lot to break down and discuss. I thought it was one of the best calls NVIDIA's ever had. I thought the questions were answered in a way that really, I think, instilled confidence in the investor base. But obviously, we're going to see how the market reacts to it. I think let's start with you, Jose. What was your reaction overall to the call?
I mean, I agree. I think I was mentioning, Chad, that this is probably my favorite earnings call since kind of this whole AI cycle started. And kind of when we started the call and kind of saw the commitment numbers, the thing I wanted to hear more about was visibility. And Jensen, I think that was kind of the first line Colette started with. She mentioned that for fiscal 2028, which is calendar year 2027, they expect at least 70% year-over-year growth. Now, Wall Street is expecting about $400 billion this year in revenue. And if you put that 70% year-over-year growth baseline, you're closer to $680 billion in revenue. Analysts were expecting about 580 billion on average. So you're talking about an extra $100 billion. So I think the visibility question was answered there. So to me, that was the biggest talking point. And after that, I was just smiling and happy. And it was the greatest earnings call ever because we got that visibility. There's another point I want to bring, and I don't want to take them all because obviously we have a lot of smart people here. But the second thing that really grabbed my attention was the 70% growth was mainly because of constraints in the supply chain. So then if you trickle down, you guys know I'm extremely bullish in the NeoCloud market. If you are constrained in the supply chain, that means there's going to continue to be a supply-demand imbalance in GPUs. And if there's the continued demand imbalance in GPUs, that means that these NeoCloud players are going to continue to have strong pricing power on their end. So if there's 2 points, obviously we can come back to me later, but if 2 points is the visibility question was answered right off the bat, and the second thing is I expect the revenue per megawatt to continue to increase if we continue to see these supply constraints there. So I'll pass, that's what I have, and I'll pass it for now.
Neil, your take on the quarter?
Excellent. I mean, even when they talked about the memory, right? The fact that memory is the reason why margins are going to come down a little bit. Stock didn't really move that much. They explained everything quite well. They even mentioned circular financing. They explained that quite well. The Amazon deal, based on what we saw in the CFO commentary with regards to the guarantees, if it's 2 million GPUs, that's also $200 billion plus in revenue for Nvidia, up to, when was it? 27, 28, I think all the way to 29. So that's another nice number there that we can add. And so yeah, it was an excellent quarter, great call. Stock is up, so everybody's happy. But they are doing exactly what they should be doing. They also explained it quite well: open source, open way, frontier model, how they benefit from whoever wins. Nvidia wins, so it was a good one.
Tanner, your thought on the call?
Yeah, I mean, they covered the main parts. Obviously, Jose highlighting the guidance is by far the biggest point, and that's why the stock completely turned around. I think that there could be, for real possibility for Q4 of calendar year 2027 of them potentially putting up a quarter of $200 billion. Because this is their own guidance. Every single quarter, they've had higher beats, quite large beats versus their own expectation, beating by 4%, 5%, 6% a quarter. So if you couple that up, this could be, a fiscal year 2028 could be somewhere closer to about 700, maybe 750 if they end up putting up really, really good numbers. So they said they're completely supply constrained right now still. They said to Stacy Raskin, if they were unconstrained, the numbers would be much higher. So as supply comes on, hopefully they can find out new solutions, new breakthroughs to end up shipping more than they would have in the past. One of the things that Jensen highlighted at the end there, which I don't think people give nearly enough credit to, is the payback period on these gigawatt data centers can be as low as under a year. And now the companies that have been able to put up those types of numbers are really signing deals for extremely short-term commitments. So SpaceX with their deals with Anthropic and Reflection and Google, those are less than 1 year paybacks. The megawatt rate on an annualized basis would make a gigawatt payback in less than 1 year. Or Nebius, they talked about their Q3 deals. And the pricing per GPUs has constantly gone up. Now, I think a part that people should be highlighting here too is if NVIDIA is going to be putting up these numbers, who else is here to benefit? The neoclouds that, well, Jose for sure. Jose for sure. But, you don't think Dell or SMCI or a lot of the memory names that are continuously being a lot of the constraint here are not going to benefit. That's why we're seeing a lot of green candles across the board, is the commitments that NVIDIA just talked about is to the benefit of SK Hynix, to Micron, to many of these names. So, well, Nvidia is by far my biggest position. It's not the only way that I'm playing this boom, but there was not a single piece of commentary there from Jensen that spelled that this is even slowing down. So look out tomorrow for a flurry of midterm upgrades for NVIDIA's revenue and EPS. That's going to be wild. If you thought some of the reports of them putting a $350, $300 price targets was exciting, wait till you get the revisions from 40% growth up to 70% growth. That I think is going to be quite exciting. That's why it's a disco in this room now. And yeah, couldn't be happier. This is a $300 stock trading at $200.
I was just about to say, if we do not have any major macro concerns towards the end of the year, I've been in the camp that it's hard for me to see this stock hitting 250 by end of year, simply based on the nature of the size of the company. With this type of growth, and not just this type of growth, but the guidance for how it's going to continue. Notice when the stock took off, and one of my friends texted me that he wasn't watching the call. What did it take to get the stock to moon? When Jensen said, I think this was the fourth question, he kind of laughed about it. He was like, I think we will have demand grow more than 100%. He said that the exact quote was, I think demand is just inflecting. And he sees visibility into more than 100% growth, which is kind of the answer to that question of how would you grow if you weren't supply constrained? He was like, a lot. He's like, right now, we can only supply 70% of it. That extra 30% would be potentially hundreds of billions of dollars of revenue, as Tanner is mentioning, on a yearly basis. They also gave annual revenue guidance for the first time this quarter. I mean, every level of transparency you wanted is there. I don't know how the street holds it under 250 going into the end of the year, unless Iran war, macro, bond yields, et cetera, holds it down. I mean, because when you really think about what this trajectory looks like, this is not a peak for earnings growth or revenue growth. This is almost just like the beginning. Now, they're not going to grow triple digits for the next 5 years, but it looks like you've got another year of this 90 to 100% growth, or at least 80 to 100%, and then it starts tapering off. By then, I mean, Nvidia would be trading at 12 times if it's flat and it's still growing at that level. So yeah, I think this was one of the best calls we've ever heard from Nvidia. And if the stock sells off on this, I think there's going to be a lot of buyers that get ready to come in.
It's true. Once you took off your jacket and I took off my wig, it literally...
I did notice that. I noticed that. I did notice that too.
It was unbelievable timing.
I took it off because it was just getting too hot. I would imagine you were probably hot under the outfit as well.
My head was itchy.
Yeah, the guy turned his room into a strip club.
Got
undressed, lights out, disco. I mean, this...
It's all business, from the top up. What's on stream, it's all party on the waist down. Once again, you guys leaving me hanging. It's absolutely disgusting what you guys do to me here. Okay, it's truly rude. I come here trying to bring jokes.
You do it to yourself. To be fair, you do it to yourself. You do it to yourself, brother. We're here to support you.
I'm putting in effort. I'm buying wigs. This thing's an itchy $50 wig. I did this for you guys.
You paid $50 for that wig?
Yeah, with the hair nets and everything that I had to put on. It was ridiculous.
Okay.
Shouldn't go to Turkey now because you got it all figured out.
Yeah.
Jose, what did you think about this quote when Jensen was talking about the supply chain and how much more they have to invest in their ecosystem?
This quote of going to dinner?
Yeah.
I just thought it was funny. I mean, but they continue to say they go dinner with everybody. I mean, they have there's so many players in the supply chain industry, in the supply chain line for them, that they're going to continue to do these big investments. So I don't think I have much here to say. I'm just yabbling here.
It's a contrast of the steak dinner from Carp.
There was something I thought was pretty interesting. At the beginning, I think Jensen did talk about how CapEx for the 5 hyperscalers is expected to be $800 billion this year in 2026. But for next year, it's expected to be $1.3 trillion. Jensen already kind of telling us what the CapEx of these companies are going to go. And I do think Amazon is going to be a big player. I mean, we saw that announcement. There's also another big announcement that Amazon and Nvidia announced that Amazon is working with Nvidia on NVLink Fusion to kind of connect their ASICs with Nvidia solutions. But it seems like Nvidia is also kind of leasing out or licensing out or renting out, however, their memory storage solution. And Amazon is actually going to be a big customer of that. So I'm going to do a little bit more learning on that, but I thought that was interesting from the Amazon side.
Yeah, one thing I'll highlight about the CapEx numbers, there were some Goldman Sachs reports that said it would be 1.4 trillion next year, and I think many people brushed that off, and maybe they were slightly high. But the visibility that Nvidia has, way more than a single analyst that's talking to, their connects, they're literally putting in orders with Nvidia. So I would put on high regard that 1.3 trillion is really what's going to come in. And by the way, it could actually be much higher than that, distributed across TPU, Trainium, Cerebras. Like they're not the only player. That's the visibility that Nvidia sees. So there's a wild amount of spend that's expected to come in.
Yeah, and I wonder. Sorry, go ahead, Neil. I've done too much.
A quick one here on. Actually, if I check on fiscal, the expectations for CapEx, if I include Google, Microsoft, Amazon, SpaceX, Meta, Oracle, Nebius, and CoreWeave, I'm at $1.26 trillion for 2027 and 1.4 for 2028. So
lower, even though you included other names that aren't even hyperscalers.
Correcto.
Yeah, that's crazy.
And I was going to say, I wonder if that 1.3 trillion is taking into account only a 70% growth due to supply chain. Like, what happens if that supply chain, if Jensen goes, oh, I actually have extra supply that we ended up building something a lot faster, is that CapEx actually closer to that $1.4 trillion?
Yeah, I think that's a great point, Tanner, on the visibility. I mean, we know that Google said 190, Amazon said 220, Meta's probably going to be that 200 range, so will Microsoft, but it's probably going to be a bit more, just like it was this year, because, Jensen's probably collecting the orders already, and so are all the other stocks in the supply chain. I also thought addressing the circular financing stuff head on was really important. Colette, I think this was in the first 5 minutes, she was like, some of you may call this circular financing. We see it differently. Now, you will have people that say, you can call it whatever the hell you want to call it. It's still circular. But the fact that they're addressing this stuff head on and saying, look, this is what we're doing. She made it very explicit that these are not loans that NVIDIA is giving. It's protecting their balance sheet. But this is important to proliferate the advance of AI. By the way, Jensen's going to be on CNBC in a bit. So as soon as he's on, I'll pull him up. I thought that was important. And I thought that gave the street a little bit of clarity as well. Also, the open source question I thought was important. Jensen gave you the same answer he's been given for a couple months now, which is that you need both open source and Frontier Labs. And Frontier Labs, he seemed relatively excited about the IPO for OpenAI and Anthropic. At the end of the day, it's important that those companies win for GPU demand to continue to be strong, at least in the short term for NVIDIA. But obviously, if open source proliferates beyond those companies, they still will have the demand. But, he said both are needed. And so I think every question from every angle, did anyone, put in the chat, did anyone find a red flag in the answers? Did anyone feel a little weird because there's always something like that on these NVIDIA earnings calls. And I don't even think we're trying to hype it up right here. It's like the stock, is lower than where it was last Tuesday. It really just felt like a good call with transparent and explicit answers that we needed.
Yeah, I think the amount of glazing I'm doing would be the same if the stock price was down.
Yeah. Yeah, I agree. And I think if the NASDAQ was up a lot more after hours, NVIDIA would be, crushing 225 right here. But the fact that it's still being held down a little bit, tomorrow will be really interesting if it dumps at the open and they once again take it down. And I really want, if they take it down, I wonder if they take Micron and Nebius and Bloom. All of these are up 4 to 5% after hours. And I think for good reason. If NVIDIA is ready to have these many commitments, explicitly they are saying the trajectory of earnings growth for the entire supply chain, not just them, is going to go on for at least another year, if not 2 years. And if that's the case, these earnings, make the multiples look cheap. DRAM up after hours as well with memory. Neil, you've been one of the earliest investors here to Micron. I think, well, here's the broader question on Micron and everything else. Do you think this was the earnings that can get memory back to all-time highs and as a result take semis in general back to all-time highs?
Probably we have to wait until Micron reports, which, a couple of weeks from now. Logically speaking, it should be above $1,000 per share, Micron, just based on everything every other company has told us over the last couple of weeks. It purely benefits a Micron, SK Hynix, and things like that. And yet the stock is still around $900 per share. So I think the big move, we will have to wait until Micron reports. And even then, I think if we go back to, what was it, SanDisk's, I think you and Tanner covered that. The questions were about, okay, cool, you're growing now, you see insane amount of growth, but what about 27, 28, 29? It's always about what comes next, what comes next. And okay, that's fine. If the market is skeptical, I guess they'll keep asking the question. But I go back to my previous point that I made. It's, you can be skeptical about every other company's growth as well. If you talk about 3 years down the line, there is no single company that can really predict what happens 3 years down the line. And yet right now with the memory players, we're talking here about names that are what? Low double digits, PEs, super profitable, generating tens of billions of dollars in free cash flow. By the way, Micron is not allowed to buy any shares until December. After December, I am very, very sure that they'll announce a huge buyback program that will help the name. And so again, it's just a matter of when the pop happens, not if, because every time you hear these executive talk, they say time and time again, you might not believe them, which is fine, but this cycle is a bit different than the previous ones.
Yeah, that's a really important point, Neil. I think there was a report out talking about through 2028, they can buy something like 40% of their shares back by 2028, Micron, based on their projected free cash flow, or operating cash flow, I should say.
Yeah, I think the memory names probably, I mean, if this doesn't take the memory names higher, then, I mean, now Nvidia did say, like, because of the memory shortage, that, you know, that's what's causing the pricing inflation. But at the end of the day, that's not bearish the memory names. Maybe it's bearish the trajectory of how much those margins can go higher. But at the PEs they're trading at, it's not necessarily bearish. Jensen will be on in a second, and then we'll see what he continues to further say. The neoclouds are ripping, as Nvidia explicitly mentioned that the neoclouds will be a big beneficiary of this new product that allows them to kind of split the revenue with them. Jose, we got a question for you in a super chat. How does this call make you feel about AMD?
I'm still good. I mean, compute constraint, right? Compute constraint. So you're going to be able to, it's not always like this, but we're currently in the market where you're going to buy all the chips you can get. Now, for me, my bullish thesis has never been AMD was going to destroy Nvidia. And for that reason, I still believe this is strong for AMD.
Neil, any comment on AMD based on this quarter?
Nope. No. AMD's growth is coming no matter what, because the market is growing. AMD with the Helios rack is coming out. So the growth is there. This does not change anything. Just like with an Nvidia, they see a couple of years out the demand for AMD's MI400 series. There is MI500 series that I already talked about. That didn't change after today's report and call. And so I don't expect anything to change with regards to the growth. We will see AMD's growth accelerate from here on out.
What's the chances that we get to 250 and I win this bet with Steve this quarter?
Look,
I think off the back of those earnings, I think 250 gets hit soon.
The problem is we could have said that for the last 2 quarters. I know this one was even more exceptional, but there is something about this name, whether it's 8% of the S&P 500 or 5 trillion, that the street is not letting it. Maybe this is the one that breaks it.
Well, but I feel like the reason why I say that, I think the real difference is not just another quarter worth of earnings, but it's because of that additional next year guidance that really, like the upgrades, I think are going to be really significant this time around. Either way, you know, I'll have the disco ball going as long as we stay above 250. And I also got this for 250 just in case, but we haven't got there yet. But if I have to blow the horn, I will. Okay, I don't have a bell, not here to steal any valor, but I will siren this whole house. Okay, my wife's going to be freaking out. But if we have 250, I can get a new house if she burns it down.
I will be very excited to turn into the live stream the day we hit 250.
There you go.
Cyber. I also think if we hit 250, dude, S&P's got to be pushing 8,000. Like, it's just too big of a company for the S&P to be flat. So I think that's also part of the reason that if we get 250, it's got to be a market moving thing. Which what would really get us there more than Nvidia earnings is Trump announcing a ceasefire, like a legit one, or a deal, full on deal.
Yeah,
I think that gets us there as well. Okay, are people happy? I mean, I know the stock's up a little bit more now, so people are probably happy, but it does feel like this company, I think Jensen will be on in about 2 minutes, is getting what it deserves here. At least to an extent, after hours.
Chan, I really like your lights, and your jokes have been really great. I'm sorry for muting myself when I laugh. I'll try to do better.
Jose, brother, you've always been the biggest supporter, and I know that you're on my side. You're
Tanner,
welcome on the channel any day.
Tanner, you know he's being sarcastic, right?
No, he's not, dude.
He is
no,
absolutely being. Did you not hear the way he just said that? Like,
he spoke like an AI. It's like an AI response after you asked something and the response was completely wrong. It's like, I'm sorry, you are correct. I was mistaken.
Amit's trying to yuck my yum, dude. Let me have this, okay?
What is this a Canadian yuck your yum? What?
You're poo-pooing all over my happy days.
Is that me, or has anyone heard that?
That was good. I like that.
I don't know if that is a Canadian thing or not, but I've definitely heard yuck your yum.
I've never heard that before, but okay. What else happened in this call? I mean, I think we covered most of the stuff. Open source, memory. They didn't mention SpaceX. I was kind of surprised he didn't give a nod to Elon on anything. I thought he would, given how much Elon is exclusively working with him. When he mentioned Grok, I thought he was talking about Grok, and then I realized he was talking about the other Grok. That was kind of, I don't know, a little weird, but not that big of a deal. They did mention Nebius. Did they mention CoreWeave? They didn't mention Iran. I think they explicitly did mention Nebius, which got that thing moving a little bit.
Yeah, a few times. It was nice.
Nebius, yeah.
Iran reports tomorrow. I mean, Nvidia gave them the perfect layup to actually move the stock tomorrow after their report, so they better not screw it up.
Yeah, I think Iran has a good framework to crush earnings now. Cybersecurity, you mentioned a ton. Now, CrowdStrike, look, they beat earnings by 1%. This stock is on its way to trading at almost like 70, 80 times sales. So I still think the multiple is intense, but when you got Jensen talking about cybersecurity, when you got George Kurtz basically talking about how Mythos made this their moment, I think that revenue growth has to accelerate, and it probably will, which is why investors are giving it a 10% move right here. Same thing with Palo Alto Networks. So you got all parts of the stack. Salesforce obviously getting a big move here, that Jensen has been saying for months now that these companies are not going to be dead. The semis are going to benefit. The software names are going to benefit. You had Dario finally come out and say, we're not trying to kill the software companies. I mean, he hasn't explicitly said that. It would be nice if he said that in February when everything was collapsing, but he didn't. So now that it's kind of obvious that's not going to happen, I think to an extent, Anthropic liked the marketing that, I mean, they were raising money at the time. It's really easy to get money from VCs when you're raising a couple $100 billion. When the VCs think that you're going to take over every existing software as a service business. So now, months later, that's not going to be the case. It makes sense that he's on the software train. It feels like a lot of stuff is coming together in this broader AI ecosystem.
Real quick, Jose, did you see, I don't know if the Jensen thing's happening soon, so just cut me off. But did you see the N-scale Anthropic deal?
Yeah, 45
billion?
Yeah, insane.
But did you do a little bit of math on that? It seems like not that good of pricing for N-scale.
It was like high teens, right? High teens, millions per. I saw it online, but
it was like 16 million or something.
Yeah, I wanted to see like what it included. Was it just pure like bare metal, or was there anything else included into that? So I think that's one important thing. And also with the longer timelines, I do think you expect a little bit cheaper than it, but it's more what they're offering with.
All right, Jensen is live.
likely blowout. You expect to grow about 70% in fiscal 2028. The street was looking for roughly 45%. What gives you that confidence, and how the heck could you do it?
Well, it's not easy, but let's say, first of all, demand is super strong, and incredibly, it's accelerating. You know, obviously, we're already a very large company, but to be able to grow continuously and now to accelerate our growth is pretty extraordinary. Now, what's happening underneath, the things that are going on, number one, is that AI is now useful. It's doing productive work. And the tokens that are being generated by these AI labs are now profitable. People are paying good money to use it because it's really productive. It's helping them, you know, do things and be more productive. And so the amount of tokens they want to generate is increasing because of use. The amount of tokens they're generating is increasing because the AI models are more complicated. And then now, because it's profitable, they have so many more customers who want to use it. The thing that's holding them back is compute. And so that's literally one pillar of what's happening in our business. And then after that, we're seeing AI being adopted all over the world. Every single country wants to get involved. Every company wants to get involved. Hyperscalers. And the other half of our business is everything else. It's neo clouds and sovereign clouds and enterprise companies. And all of this is all growing at the same time. And this is all happening, of course, at a time when we're rolling out Vera Rubin, our next generation product. It's going to be the fastest ramping product in our history. It's really exciting.
I want to go back to what you said about an asset we call compute. When I was at Goldman Sachs in the 80s, someone said, you know what, we ought to bundle a lot of auto loans, make them into an asset. Everyone laughed, thought it was really stupid. It's now the second biggest market. I think compute, what you're talking about with the $500 billion that people who are getting together on Wall Street, compute should be much bigger than auto one day, don't you think?
Oh, no question about it. First of all, this is not compute as in your cell phone or your PCs. That the moment that you buy them, you know, it's becoming obsolete. This is part of your infrastructure, and it's productive infrastructure. It's making money for you. One of the things that's really different about NVIDIA is that we are fungible, meaning that you can use NVIDIA across the entire life cycle of AI, from data processing, pre-training, post-training, all the way to deploying the AI agents. That's number one. Number two, we literally run every single model. We're the only company that I know that runs every single frontier model, every closed model, every open model. It's built on NVIDIA. It runs on NVIDIA. And because of that, we're fungible. You could use this across all these different use cases. And because we have so many developers, our ecosystem is so large and we're used all over the world, the asset is durable, it's long life, it's fungible, and therefore, you know, it's rentable. People are renting it for great money these days. And so that's the reason why it's an investable asset.
Did you even know at one point that your, say, 2023 edition might be worth more now than they were when they came out, like some sort of fine wine?
It is true. In fact, it's some of the CSPs have already been talking about that the infrastructure that they paid for, paying NVIDIA's prices that they built is now worth more than when they first paid for it. And the reason for that, of course, is that NVIDIA's architecture is software defined. Because of CUDA, our software is getting better all the time. We ship the hardware in the beginning, we sell you the hardware, but we continuously improve the algorithms underneath so that the machinery gets better and better and better over time. So over the history, I think CoreWeave, Mike over at CoreWeave recently said that A100 is going to be sold for 9 years of its life. And the thing that's really incredible is during that 9 years time, even though the hardware didn't change, we improved and introduced all kinds of new algorithms and software that we continuously enhance that infrastructure completely for free over its entire life. And so that's the reason why the hardware, what the infrastructure just seems to get better and better and better over time, just like fine wine.
All right, now that cures one misperception, which is that you're supposed to be written off in 3 or 4 years. Let's take that off the table. The other thing that bothers me, kind of rankles me, is that I read in the journal, NVIDIA has become a banker to the AI boom, putting it on dangerous ground. If dangerous ground is investing on the ground floor of some incredible companies, well, I want to be dangerous. But is it possible that maybe we should distinguish between the investments and the backstops, and help me to try to figure out where this kind of story is just plain wrong, frankly?
Yeah, I think they're missing a very big point. First of all, this is the first generation of startups. that needed tens of billions of dollars to get funded. When was the last time anybody heard of a startup that needed billions of dollars to get off the ground and needed tens of billions of dollars to become profitable? That just never happened. But that's really the nature of AI. The cost of building AI, the cost of deploying AI, it's very capital intensive. And there are several companies, these frontier AI labs, that are once in a generation companies. And we want to be investors in them. We want to support them. We want to be a partner to them. We would love for them to build their ecosystem on top of us, of course, and then scale up their business along with us. And so the opportunity to invest in them in the beginning was a great opportunity. Frankly, I just wish I invested more. And now that they're scaling up, the tokens they're generating are profitable. Their services are profitable. The number of customers is growing incredibly. The only thing holding them back out now is compute. But even during this time, they're not investment grade. They don't have the track record, the capital track record, the financial track record to be able to capture or secure capital at a low cost. And this is where NVIDIA could be helpful. We could be supportive of them to help them grow at a time when everything they make, their tokens generated, are so profitable. This is really the time when we can help them with their flywheel. And so as far as I'm concerned, this is one of the best investments ever. It's a once in a generation, once in a technology generation opportunity. And then this lastly, the risk for us, because of the nature of NVIDIA's architecture, because it's fungible and it's durable, the risk to us is still, in the worst case scenario, we'll just use it for another customer in another use case. And so I think the backstop is we're thoughtful about it, we're disciplined about it, and we're supporting extraordinary companies as they're becoming profitable. And as we know, there's hopefully there'll be public companies, and people will all get the opportunity to see what we see and why we're so excited about them. But anyways, this is a really great investment, and I think the risk is low.
Okay, let me ask you something. It's a kind of a personal question. If you gave me, let's say you invested $30 billion in me, and then I called you and I said, you know what? The whole time I've been working on something, a chip that I think can really hurt you. It's called jalapeno. I don't know. Let's call it, tomatillo. And you said to me, well, that's fine. Would you really say that's fine? Because I personally would be hurt if OpenAI did to what they do to NVIDIA if they did to me.
I'm okay with it,
yeah.
Jim. There's so many XPUs that are being announced. And as we know, it's not easy doing what we do. We've been doing this for 33 years. And so lots of projects get started, lots of projects gets canceled. We're here to support our partners, and we're going to build the world's best technology. I have every confidence in that. We're going to be the most productive infrastructure that they have. I have every confidence in that. We have the supply chain and the technology scale to be their largest supplier. I have every confidence in that. And so, I don't have to take anything personally because I've got so much confidence in what we're able to deliver. And look at all of the XPU announcements and all the startups that have been announced. And yet today, NVIDIA is increasing our market share of the AI market, where our growth is accelerating, our technology leadership is extending. And so I'm very comfortable with all the competition.
Okay, and I also thought it was interesting, Andy Jassy loves you, okay, but he's all building his own chips, and good for him. But when they wanted to expand Amazon Web Services, they bought 2 million more NVIDIA GPUs. That's quite a commitment from someone who, in some places, is considered to be a competitor.
They're going to buy 2 million GPUs. They're going to buy millions of CPUs. And they're going to build their robotics fleet on NVIDIA's physical AI systems. They're going to host NVIDIA's Nemotron open models on Bedrock and SageMaker. Yeah, so this is going to be a great partnership. I think it's just really important that people realize that NVIDIA is the only computing platform that is a full stack AI factory. We're the only computing platform that is in every single cloud, on-prem, at the edge, and sovereign AI clouds, and neo clouds. We're the only platform that's in that way, that's everywhere. And because of that, we attract all of the world's AI startups. In this last 6 months, $400 billion of venture capital went into startups because of AI. This is a once-in-a-generation technology platform shift. Everybody wants to be part of it. $400 billion of investment into AI startups, and all of them are probably using NVIDIA. And so if any of the clouds would like to attract any of those AI startups, having NVIDIA in their cloud is going to make their clouds much more attractive. And so and however you think about it, whether we have the best technology, the most productive technology, the most rentable technology, in every single case, NVIDIA is a great partner of yours.
Hey, let me ask you something, because I think that you are a leader of all those different companies you mentioned, whether it be the 50% that is not hyperscaler or 50% that are. You're the leader. Would you offer us a code of conduct for your customers so that they don't do crazy things? They worry about water more. They worry about air more. They worry about electricity more, so that we could say, listen, we're good citizens. You should want us. Because I think you're the only person that has the gravitas to do that.
We have to do a better job. The technology industry, the builders, and have to do a much better job working with the communities to get prepared for this AI infrastructure build out. Taking a step back, this is America's great opportunity. This is an extraordinary opportunity. AI data centers, AI factories are generating so many jobs all across America, hundreds of thousands of jobs. They're improving communities because they're bringing a lot of tax dollars, they're bringing a lot of economy into communities. It is also the case, this is the first time in probably the last century that we're able to invest in sustainable energy, invest in improving our energy grid, securing our energy supply, reducing the cost of energy across the country. This is the first time in history that we're able to do that because of the enormous market dynamics, the market forces that are able to invest in the energy ecosystem. It is the reason why all the energy company stock prices are up and all the power generator stock prices are up. I mean, everybody is doing well because we are helping the United States, helping America enhance its energy position. And so I hope that people take a step back and realize that this is creating jobs. It's going to reindustrialize the United States. The manufacturing sector that we've lost over the last 50 years has an opportunity to come back. And then lastly, a great opportunity for us to invest in America's energy sector, our energy grid, like we've never been able to do.
Well, it does sound like it's gotten too political, right? I mean, it's too political. We should just take the moral high ground. Another big country that's our competitor is not, I think, when it comes to the environment. This is our chance, right? This is our chance to do it. It's also our chance, if we do open source, to go against that in a competitive way. That I think environmental destroyer that is China. This is our opportunity for world leadership, isn't it?
There's no question this is a great opportunity. Hey, listen, this is a technology that was invented here. This is a technology that has been advanced here. We have to make sure that our communities, our society, all of our companies, all of our people in the United States embrace this technology so that we can take advantage of what this technology could do for all of our ecosystems, all of our economy, and all of our societies. And so this is one extraordinary opportunity. We can't allow AI to not diffuse across all of the industries.
Right.
We must make sure we embrace this technology, adopt it, and take advantage of it.
Okay.
Otherwise, we're going to get left behind.
I know. Now, Apple, a company I know you have tremendous respect for, they felt like you that their stock was very undervalued. I mean, you're just selling arguably at 16 times 28 earnings. That seems ridiculous to me. Is it time to make that buyback much bigger than the roughly $98.5 billion left to buy? Why not double that? Why not do what Luca Maestri did? You're such a great CFO. You have such a great CFO, Colette Kress. Huddle with her. Just huddle with her and come up with a number more befitting of how cheap your stock is. Best investment of all these things you're talking about.
We are going to, I appreciate that. We are going to return cash to our shareholders. We're going to buy back stock and buy back stock. All the excess cash, net of what we need for strategy and operations. And we are going to generate a lot more free cash flow next year than this year.
Oh, good.
Furthermore, this year we have several very large investments. And those large investments in the AI labs are not going to repeat. The opportunity for me to invest in these frontier AI labs is not going to happen again.
Right.
And the reason for that is because I expect them to go public. And so the money we've invested is going to generate tremendous returns. But I doubt that I'll have the opportunity to invest more. And so next year, we're going to have tremendous amount of free cash flow. We, this last quarter, bought back 60%, and we're going to increase that going forward. So I think we feel the same way. Buying back Nvidia stock is a tremendous opportunity.
Cheapest asset out there. Well, look, Jensen, I wanted to thank you. Just a remarkable quarter. And thank you for explaining all that stuff about you being the financier. I mean, to me, you've been one unbelievable investor in all the years I've known you. You've got the best record of anyone I've ever talked to. So why shouldn't you do investing? Thank you so much for coming on the show. I really appreciate it. It's great to see you, sir.
Great to see you, Jim.
Excellent. Okay, that's Jensen Huang, CEO and founder of NVIDIA, after a quarter that only takes it.
I mean, I thought the answers to every single one of those questions was in line with the earnings call. It's just really, really good communication from Jensen here.
Yeah. Was for real, the question around water use and power and the more environmental questions, how much is that an NVIDIA question versus like a Vertiv question? Like, you know what I mean? Obviously, the GPU and the actual chip side does play a part, but they're not playing the major part here. I just think maybe, Jim obviously wanted to ask that question that might be on people's mind.
No, he's probably using, because if Jensen speaks, it's Jensen. I can't even name the CEO of Vertiv. So yeah, that's like if Jensen says something, then I assume the whole industry will just say, okay, yeah, you're right, we should do it. Which I think they all do anyways. Like it's in their benefit to make sure that all of this noise goes away, which will it go away, will it not? I don't know. In the US, you guys have a midterm election later this year in 2 months or so. So expect the noise to increase significantly.
I think the OpenAI question was also really good. I mean, essentially, Jensen basically said everyone's trying to do custom ASICs. They're not going to compete at the size and scale that we are due to our supply chain, CUDA, library, all this stuff. I don't think he's saying they're not going to have usable chips, but it's not really going to impact NVIDIA's growth trajectory.
Yeah, he said, some of them show up with good results. Some of them get canceled. He's like, we don't even know if this is going to come to production.
Right. Jose, any additional thoughts from that interview?
No.
Yeah, I think it was very consistent with what we heard on the earnings call as well.
Whenever a company has this high of a margin of safety, I mean, just the ease of holding this stock, I'm sure this goes for all of you guys, but this is not really the speculative position that causes you to not sleep well at night. I mean, whenever you start to put this up against other names that people get very excited about, and I'm not here to bash this name, Cerebras on an adjusted net revenue basis, exact same sector, put up 103% growth. 103%. NVIDIA just topped that, doing $96 billion worth of highly profitable revenue. Cerebras doesn't even have a PE because they can't turn a profit just yet. So, I mean, the size and scale versus other companies at much, much higher valuations in terms of how much it is versus their revenue and versus their profit, it's just wild. This company is very cheap, like Jim Cramer said.
NVIDIA up 4.3% after hours. Bloom's up 4%. Dell's up 1%. Nebius up 6%. CrowdStrike up almost 10%. Palo Alto up 5%. Cerebras up 3%. SMCI up 2%. CoreWeave up 5%. The entire sector benefiting from NVIDIA earnings. And it seems like Jensen executed communication-wise and with the numbers that were just some of the most monumental numbers we've ever seen. And tomorrow in the market open, we're going to see how much the street actually respects these numbers. All right. Thank you all for joining. Another NVIDIA quarter in the books. Deeply, deeply appreciate it. Means the world. Thank you, everyone, for all the super chats and all the channels. Cheryl, thank you for the super chat. Mamba says, after crushing last week, Tanner showed up like LeBron in his first finals today. I think the outfit, people enjoyed it. I think this was on your channel, Tanner, this $100 super chat.
Yeah.
So thank you everybody for the love and support.
Thank
It means
you.
the world. And yeah, we'll keep covering the markets. We'll keep covering NVIDIA, but it means a lot for all of us to come together. You know, thousands of people across the world tuning into our analysis and coverage. It really is special, and you know, we deeply appreciate the opportunity to do this every quarter for NVIDIA.
Say the name of our podcast that you decided on, Amit.
I didn't decide any name.
You texted it in chat. I'll show the DMs.
That name was a chat name that that was not endorsed by me. We still need to figure out a name for this podcast stream. I don't know what's going to be the name, but eventually we'll figure it out.
Thanks, everyone.
Thank you, everybody. Appreciate it. We will see you guys on the next earnings, and we will see you guys every Wednesday and come up with a name eventually for this podcast. We'll be live every Wednesday, and I'll be live tomorrow for the market open. The Yuck Yum podcast. Maybe that's it. Maybe that's the one.
Don't yuck my yum.
Thank you, everybody. We'll see you guys next time. Bye, everyone.